Notice of the time and place of these committee meetings was publicized by notifying the area news media, by updating the OPPD website, and by emailing such notice to each of the district's directors on May 14th, 2021. Thank you all for joining us remotely via WebEx events. As a reminder to board members, senior management, and OPPD staff, please mute your microphones to reduce background noise. To members of the public, thank you for attending. You are in listen-only mode. If you have any technology questions, please use the chat feature in WebEx to communicate with the event host. Our agenda for today's meeting is as follows. We will conduct a closed session this morning to discuss one item, the CEO selection process. We will conclude the discussion no later than 9:45 a.m. in order to open the WebEx meeting to allow the public and OPPD staff to join. We will begin public session at approximately 10 a.m. and receive reports from each committee. We will also conduct a closed session in the afternoon to discuss the preliminary report on the polar vortex after action review. Director Moody, do we have a motion to go into closed session?
We do. I move that the board go into closed session at this time, 9:01 a.m., to discuss the CEO selection process and the finalist for the position, L. Javier Fernandez. A closed session is necessary because the discussion will involve competitive and confidential compensation and retention information, as well as performance evaluation information. A closed session discussion is necessary to prevent needless injury to Mr. Fernandez's reputation, and he has not requested a public meeting.
All right, this motion requires a second. Do we have a second?
Second.
All right, Ms. Centers?
Wagner,
Yes.
Kavanaugh,
Yes.
Howard.
Yes.
Director Molhoff is not on the line. Director Moody,
Yes.
Spurgeon,
Yes.
Williams,
Yes.
Yoder.
Yep.
Motion carried.
Okay, the motion to go into closed session has passed. This closed session will be limited to discussion regarding the CEO selection process. No votes or other action will be taken. Okay, so at this time, we'll request that public attendees drop off. Thank you. A motion and second is required to reconvene in open session. Do I have a motion?
So moved.
And a second?
Second.
Ms. Centers, will you call roll? Yes?
Wagner,
Yes.
Kavanaugh,
Yes.
Howard.
Yes.
Director Molhoff is not present. Director Moody,
Yes.
Spurgeon,
Yes.
Williams,
Yes.
Yoder.
Yes.
Motion carried.
All right, the motion to come out of closed session at 10:01 a.m. is carried. This closed session was limited to discussion regarding the CEO selection process. No votes or other board action were taken during the closed session. Earlier before the closed session, I made the announcement regarding public notice of this meeting. As a reminder to board members, senior management, and OPPD staff, please mute your microphones to reduce background noise. To members of the public, thank you for attending. You are in listen-only mode. If you have any technology questions, please use the chat feature in WebEx to communicate with the event host. Per the board's guidelines for public participation, we do not take public comment during the all committees meeting. We will take public comment at the board meeting on Thursday, May 20th. The board meeting will be conducted in person at the Omaha Douglas Civic Center and will begin at 5 p.m. The public may attend in person or remotely via WebEx events. Joining me today via WebEx are my fellow board members, Mike Kavanaugh, Sarah Howard, Craig Moody, Mary Spurgeon, Eric Williams, and Rick Yoder. Janice Molhoff is currently attending another OPPD related event. We also have President and CEO Tim Burke, our General Counsel Steve Bruckner with the Fraser Stryker Law Firm, members of our senior management team, and OPPD staff. Additionally, we currently have about how many attendees, Brent? About 20, I think. 20 attendees in the meeting consisting of OPPD employees and members of the public. We conducted a closed session earlier to discuss the CEO selection process. We also will conduct a closed session in the afternoon to discuss the preliminary report on the polar vortex after action review. At this time, we will hear the following committee reports: governance from Director Moody, finance from Director Yoder, systems management and nuclear oversight from Director Williams, and public information from Director Molhoff. Tim Burke will now give the safety briefing.
Great, thank you very much. There's really two elements to the safety briefing today. We're going to continue where we're following our 3 W's. Even at OPPD, we're continuing our wearing of a mask, watching our distance, washing our hands, hoping that employees and their families continue to focus on getting the vaccine as we begin to look at the current CDC recommendations as we move forward. And then the other element of the safety briefing is really for us individuals at our homes and our businesses, as we begin to think about planting trees, doing landscaping, digging, planting, whatever that may look like. Please call 811 before you dig. It's an opportunity to make sure that you're not digging into an electrical line, a natural gas line, a fiber optic cable line. It's really there to make sure that you are safe before you dig. And so during this time of year, as we are thinking about planting, whether it's developing new gardens or trees or landscaping, it's important to be able to do that. So that concludes our safety briefing for today. Thank you very much.
All right, thank you. We will get started here with a governance chair report. Director Moody.
Thank you, Chair Bogner. Good morning, everyone. I'll first provide a quick overview of what the Governance Committee discussed in our meeting held on May 13th. All members were present. The board governance retreat, so as a reminder, we typically do that on an annual basis. The Governance Committee really began preliminary discussions to plan for the annual board governance workshop / retreat. Initial discussions included objectives, the timing, which we're kind of looking at August, if not later at this point, and how we might facilitate and move forward with that. And we're strongly leaning towards having an external party do that again. We'll continue working on it. We'll share the approach with the board in the coming months. But in preparation for the workshop, we will again administer the board governance survey to the board and senior management, which always provides really great insight into the board's performance regarding governance best practices. So colleagues and senior management, please stay tuned for an email from Ms. Sinners. And when you do, please do your duty and complete that survey when you get it. So more to come on that. We're working on kind of objectives and exactly what the process will be. But again, I think we've always found those to be extraordinarily fruitful and helpful for us as a board. And in particular, with 2 new board members, we're excited to bring them into those discussions as well. Colleagues on the Governance Committee, anything that I missed that's critical with respect to the retreat? Okay, moving on. In addition to the retreat, we did spend a lot of time talking with Javier. So Javier joined us at our Governance Committee and we asked him some additional questions. So I won't go into detail on that, but let's just actually do our walk through memory lane one more time. Actually, we'll do it again on Thursday, I suppose, but just to remind everyone where we've been with respect to the CEO selection. And I'll do the abridged version for us today. Tim announced his intention to retire in March, and we immediately got moving, developing plans for how we were going to hire our next CEO and communicated those at our March 16th all committees meeting. At the end of March and most of April, we accepted and analyzed feedback from both employees and the public. And I've walked through kind of what those results were many times, so I won't belabor those again, but we had over 1,000 comments and it was extraordinarily helpful and informed many of the things that we did throughout the process. Later in April, we interviewed 5 candidates. The board broke into groups of 4 and conducted those interviews. And at the very end of April, the board held a special closed session to discuss all of those candidates. And when we came out of closed session, we had an open session wherein we agreed on who our CEO finalist is, which is Mr. Javier Fernandez. Which brings us to May. On May 10th, we had a meet and greet. Amanda and I talked with Javier for an hour and a half on WebEx and had many members of the public that were there and asked a few questions. So that went extraordinarily well and allowed us, me in particular, to get to know some things about Javier that perhaps I didn't know. And I'm sure the public gained a much better understanding for who the guy is as well. As I mentioned at our governance committee meeting a few days later, May 13th, we did bring Javier in for that discussion. So we did have a few additional questions that were, in many cases, follow-ups to some of the things that we discussed in the interviews. So we had several questions that we asked of Javier, again, just to kind of make sure we were doing our due diligence. And then today in closed session, the board discussed Javier in a bit greater detail. And again, the primary focus of our conversation was around compensation terms. So we had a thorough discussion to zero in on what those compensation terms will be. And for those of you who are members of the public wondering how this is all going to kind of shake out, on Thursday, we have a board meeting during which we will vote on appointing Javier as the next CEO and president. That will include his start date and what his starting salary will be. So we need to have a couple more conversations to finalize that. But when we do public notice the meeting for Thursday, that information will be made public tomorrow when that gets public noticed. So that's where we're at. This will conclude on the 20th, so that's Thursday, and then naturally, under the assumption that we don't see anything that's a big surprise, which is to say we vote to appoint Javier as our next CEO. He will be working closely with Tim between now and Tim's retirement date of July 1st. Colleagues, questions, or did I miss anything important?
I think
And that
that is
therein
complete.
concludes the governance committee report.
All right, thank you. We'll move on to Finance Committee. Director
Great.
Yoder.
Great, thank you, Director Bogner. The members on the May 7th meeting, pre-committee meeting that we had, I formatted it a little differently, asking subcommittee members to look at the information front and for those first 2 elements there, a Q&A. It took a little longer than the 5 minutes allotted, but I think it went pretty well, and it gave us some more time for working discussion on affordability and SD2. You see the Deborah, the decommissioning and benefits reserve account, that's going to be moved to next month. So we were looking at the reasons for it. And the June pre-committee meeting is expected to be a long one for all of the work that we have to do. So we did spend a little more time on the affordability and SD rates change. Nothing definitive coming out of it at this point. But we expect big things in June. So with that, I would like to let my fellow board members hear from our CFO, Javier, on the things he has to report on today. We will have one action item on SD3. And as I said, we have not seen the full presentation. We've seen the slide deck. So please ask questions today. Thanks. Javier?
Thank you, Director. You're just confirming, can you hear me well?
Yes, sir.
Okay, thank you very much. The first item that I have here to share with you is our first quarter financial report. If you remember, about a year and a half ago, we moved away from monthly reporting to the committee to quarterly view. And part of that was so that we could get a little bit better information, trends that are usually not very obvious or not visible on a monthly basis. We can present these a little bit better on a quarterly basis. So these are our first quarter results for 2021. It was not a quiet quarter. It was quite the quarter, and that really most of it really concentrated on that 1 week of the polar vortex. That is shaping up not only the quarter, but I think it'll shape up the entire year, our financial results for the year. So I'm going to touch a little bit more on not only on the quarter, but exactly how the polar vortex is shaping the quarter and my thoughts for the remaining of the year. On a retail revenue perspective, so these are really good news. This is part of the good news on many fronts. When we budgeted revenues for the year, this usually happens in the September, October timeframe of last year. That's when we finalized the budget. Back then we had some indications that vaccines were going to become available, but we really didn't know exactly how this was going to all play out. And so we were conservative. We assumed still the effects of COVID-19 to continue, making their way through 2021, and for us to continue to see the lower use, especially from commercial and industrial customers. For a number of really good reasons, the vaccines actually ended up helping, whether it's the vaccines or social distancing or all the other measures that we have done, have resulted in a recovery of economic activity and, for us, of electric use. So the electric use for the year has been higher than what we budgeted. So that is a really good sign. We budgeted a conservative revenue figure, and we are seeing that coming up higher than expectations. Year-to-date actuals, $243 million, almost $20 million higher than what we had budgeted for the same period on our budget. From an operating and maintenance expense, I'm going to the box on the right. We're pretty much online. Year-to-date actuals, $98.9 million to the comparative budget of 97, almost 1-to-1. We have experienced higher expenditures in the way of overtime. We had a lot of our crews have had to work a lot of overtime, getting our units ready, repairing them, getting them ready for the polar vortex, and with storms rolling into the area, we've had quite a bit of overtime. But by and large, I would say operating and maintenance expense is in line with expectations of the budget. The two blocks in the middle of your screen are the biggest ones, and I think you can see that on the graph. What we had budgeted for off-system revenue versus what we received from off-system revenue is purely a product of that 1 week between February 13th through the 20th, when we saw prices in the SPP marketplace, which are usually in the $20 to $30 range, go up to sometimes $2,000 to $3,000 per megawatt. So we were very fortunate that we have our own generation. We were able to keep our generation fleet healthy, even in those frigid conditions. And this is a big shout out to the men and women who, in those conditions, kept their units up and running and generating power. We were able to sell power, provide power to the region, and generated significantly more revenue than we had budgeted. You can see here, year-to-date actuals is $178 million compared to a budget of $34 million. This is very, very important because for a utility of our size, owning and generating with our own fleet makes a ton of difference, especially in these type of events. On the other side of the coin, we also had to buy. We buy purchase power, we buy all of our load. And so those high prices also affect us negatively when we're having to buy load and buying purchase power. And also, in order for us to run those units that I talked about earlier, we had to buy fuel. Fuel was significantly more expensive during those days of the polar vortex. And so you can see here that between fuel and purchase power expenses, our total expenditures for the quarter were $296 million compared to a budget of $87 million. So significantly higher expenditures, but also significantly higher off-system revenues. Make no mistake, I think that the netting of those two is to the negative. We had more expenditures than we had revenues, and I'm going to talk about this in just a minute here on the negative side. Other income, again, we received $4.8 million in actuals. Part of this is investment income and markets continue to fluctuate. So this one is a little harder to pinpoint exactly how this is going to turn out. But I'm not too worried about the other income piece. Again, it's market volatility. We believe that we're going to be able to make up that difference later in the year. Other expenses pretty much in line with budget. Again, this is a pretty a relatively easier to budget a line item because these items usually don't change month over month. Let me go to the next slide, if you will, because that is the one that now how did our revenues and off-system revenues compare to the purchase power and fuel expenses? You can see here on our operating income year-to-date actuals are negative 45 million compared to a budget of 4.9 million. That's over $50 million off budget as of the third quarter. This is the downside of the polar vortex. This is exactly what happened when we went through those frigid days. From a net income perspective, once you take into account other income and other expenses, you also see the delta of negative 66.9 compared to a budget of 6.6 million. We have, for all purposes, we have today, when we are projecting between now and the end of the year, we have a delta of about $60 million. That was basically caused by the polar vortex. Now, as I mentioned earlier, we are seeing revenues that are coming in very much in line with any other normal year, not with a COVID year. So we believe that those revenues should make up about $40 million of that delta. We've also taken measures to improve on our debt service. We pay down expensive debt service with higher coupon rates, and we have gained quite a bit of room by eliminating those additional debt service expenses. We believe that between now and the end of the year, in order for OPPD to finish the year strong, as we usually do, with a 2 times debt service coverage ratio, there is about a $10 million delta that the organization is looking at eliminating. And we have people all over the organization. We sent out a message about a month and a half ago to all employees where we're looking, and we have already identified different programs where we can either defer or find different alternatives for us to spend less money and really make up for that $10 million delta between now and the end of the year. I feel very comfortable, with a $1.4 billion budget to have a $10 million delta. I think it's very achievable. It's something that I have a lot of confidence in the business to do that. Cash balances are strong. That's really important after the polar vortex. For us to come out of that polar vortex event with strong cash balances, pretty much in line with what we had on the budget, is a testament to our liquidity strength before the vortex, during the vortex, and after it. We continue to be strong on the cash, on a cash position. And last but not least, capital spend. We are lagging $45 million for the quarter compared to $72 million for the budget. This is not uncommon, especially for 2 reasons. One, storm season usually throws off projects, and projects are usually delayed, and you usually catch up in the second and third quarter. But also we have, we have large projects, namely power with purpose projects. So when we were budgeting those projects last year, there were a lot of unknowns about equipment and RFPs and RFIs. So as those projects continue to move on, we are adjusting our forecast. We believe that we are on track to spend our capital throughout the end of the year. But for the first quarter, it was slower than budget. But again, I believe that we should be able to meet our budgeted targets by the end of the year. that was a lot of information. I'll be happy to answer any questions you may have.
Any questions from my fellow board members? Looking for hands. I don't see any. Chime up if you want.
Yeah, sorry, I was trying to get my hand organized. Javier, help me understand. So we're off by 60 million due to the polar vortex. If I remember correctly, so you said, you anticipate, because revenues are coming in pretty strong right now, you're anticipating that to continue. That's, I think you earmarked or identified about 40 million makeup. So that leaves about 20 million. And the organization is seeking an additional 10 million in what I'll call value engineering, cost savings, whatever we need to do to defer things to make up some additional money, which leaves about 10. So I guess I'm kind of curious, is that to get us to even for the year, or is that to get us back to where we expected to end the year in terms of net income? Help me understand where that gets us to.
It is. Thank you for the question, Director Moody. So the additional 10 million in that equation that you were describing is also it's coming from debt service savings.
Okay.
All of these is intended to bring us back to a 2x debt service coverage ratio, which is how we budget, how we build our budget. So yes, it is to bring us back to that budget. If we don't make it, we
my next question.
Right, we wouldn't meet the 2x debt service coverage, which is, it's not ideal, but it wouldn't violate any covenants with bondholders. That's number one, very important measure to have. But the other one is, it's important for us to try to meet or exceed the 2x debt service coverage, because that is a key element that supports our credit ratings with the rating agencies, and that allows us to continue to borrow money at really low interest rates. In fact, you're going to hear from my colleagues in the Treasury Department next month on a resolution to issue debt later in the year. So keeping a good, strong credit rating is incredibly important for us. So that's what we're trying to aim for, ending the year with a 2x debt service coverage ratio. Keep our ratings, but also keep us in a really strong footing to start 2022 and then 2023. This is I usually refer to the 2020s decade as it's going to be a decade of growth, right? We have projects, we have Power with Purpose, we have a lot of ideas, a lot of projects going on, and starting the decade in a strong financial footing is incredibly important. So that's one of the reasons why my focus has been on, let's meet our budget targets by the end of the year. I think we can make it, and very important, I think, for the board and for the rest of the public to understand is we will likely need board action on our fuel and purchase power agreement at the end of the year. It'll be mostly to forgive some of these losses, and we'll have time later in the year to talk about that. But for the public, we are not looking at increasing rates throughout the year. This is incredibly important, because if you've seen newspaper articles or in other media articles from other utilities who have not been as fortunate as us, some utilities have had to raise rates. I do not expect that to be the case for OPPD. We started solid. We should be able to end the year in a really good financial position without raising rates for our customer owners, which is, to me, personally a very, very important goal.
And thank you for explaining that, Javier. And the rates was going to be one of my next questions, so thanks for jumping ahead. Does that mean that, and again, like we'll see how it plays out, I suppose, right? But you're not anticipating raising rates in order to close a gap, and I assume that also means that you don't anticipate dipping into the rate stabilization fund in order to not raise rates. Is that the general expectation right now?
That is correct.
Okay. Great. I'm over. Thank you.
Thank you for your good questions and the good discussion. Director Bogner?
Javier, can we return one slide to slide 22? I'm just seeing this now. Of course, we saw this in the finance pre-committee meeting, but I didn't bring up this question. Under the other income graph, that graph looks weird to me. The y-axis looks strange. The bars look strange compared to the year-to-date actuals. Are we seeing something incorrect on that graph?
You're catching me off guard here.
I'm sorry.
If
I'm
you know,
sorry.
if it's okay, I'll come back to you. I'll
Okay.
phone a friend here, and if it's okay
All
with
right.
you,
I think that
I'll bring it back.
y-axis should start at 0, and I'm thinking that year-to-date actual number either in the orange box is incorrect or the bars are incorrect. So that's the context.
I'm pretty sure that there are a few people already looking into it right now, so I'll get back
Okay.
to you. Thank you for
Thank
that.
you.
Director Bogner, thanks for your question. I'm looking for other hands and for other comments. Okay. I think, so just to reiterate, I think this $10 million current expected shortfall and our ability from it is really a great story for us at OPPD and everyone that's worked to keep it at that level, given these amazing out of budget revenues and purchase power that came through the polar vortex. I think ending up with that little delta, little 10 million, is great. So I'm really looking forward, and thank you, Director Moody, for pointing out our expectations not to dip in, not to impact rates, and this wonderful. Okay, so shall we move on? Javier?
Yes, thank you, Director Yoder. The next one is this one is a little bit less exciting than the previous topic. If you had asked me this question a year ago, the pension plan was certainly a big topic with the market changes and the drop in market values that we experienced in March, April, and May of last year. It was a big area of focus. Today, it is still a really important area of focus, but we have continued to see a recovery on the stock market. The fixed income market, not so much, with rates continuing to be as low as they are, with the Federal Reserve continue to implement monetary policy. It has affected fixed income markets, and so you will see a little bit of that here demonstrated in our earnings. But by and large, I am very pleased to report that the quarterly return for our pension fund was 1.6% positive. The index that we benchmark all of our investments would have returned at 1.9%. So this quarter we are below the index, and part of it is because of our heavy reliance on fixed income securities. We are a more conservative pension plan, and so when times are bad, we typically do better because of our exposure to fixed income securities. When times are really good, like now, and with interest rates so low, it's not unexpected for us to have a little bit of a lag with the benchmark, but still a 1.6% quarterly return for the fund is phenomenal. The plan at the end of the quarter, the value of the plan was $1,168,000,000, which it grew from the end of the year, from the last quarter. And again, I am very pleased. We are right now conducting an asset liability study for this plan that will be conducted throughout the rest of the year. We will present recommendations later this year about any potential rebalancing of assets between equities and fixed income and alternative assets. So we will be discussing more about this plan in the coming months. For now, I'm pleased to report the positive gains and that we have more than recovered the losses we had last year. So the plan today is the value of the plan today is higher than the highest point that we had last year. And with that, I'm happy to take any questions.
Looking for hands. I don't see
Alright.
anybody. Does
I
anybody want to
couldn't
speak up?
I couldn't get my hand raised on that
Sorry.
mechanism quick enough. So I know that we've talked a couple times that a couple of our fund managers are on watch, and possibly up for consideration for replacement. Do you want to talk at all about that, or provide an update of where we're at with things on that? I think AQR may have been one of the ones.
I don't have an update on that, Director Bogner. We are looking at that. We are working with our investment managers or investment advisors, Siegel Marco, who are looking into that. We haven't had a meeting update on specifically what the action is or what the recommendation will be. But as soon as we have it, I'll report it back here to the Finance Committee and to the board. But no updates so far.
All right, thank you.
Thank you, Director Bogner. Director Williams?
Yeah, I appreciate the update here, Javier. And I guess in early 2020, I want to be careful about forecasting, but we had a brief discussion about the idea that the good times in the market don't last forever. And shortly after that, things did turn around. You highlighted that our investment strategy is very robust in both good times and prepared to mitigate the potential downside consequences when things are challenging. And we saw that carried out in 2020. So again, appreciation to everybody for being prepared for that. I guess my question now is, if you look from the high point in the market pre-COVID to where we are now, the annual rate of return is higher than we have seen in almost any previous year, even in the last 10 years. And so my question again would be, as we look forward from where we are now at an even more elevated asset valuation peak, do we have any thoughts about our strategy moving forward, or would you like to reiterate the preparations that we've made for times when things don't always go as well as we might hope, and the potential that might happen again in the future?
Yeah, Director Williams, you that's an excellent question, one that I chat with my team quite a bit. It's hard not to get excited about the market today, right? And I think that's our jobs as stewards of these funds, is to make sure that we keep perspective. The asset liability valuation or study that we're conducting this year takes into account a much broader time period, not just this year or the last year. And I fully expect that the results will come back with conservative projections into the future. We'll take the gains when they happen, but we cannot count on them happening forever. It's not prudent for us to do that. So I will be more I will be better prepared to address your question specifically once we have the asset liability study. My response to you today is we are sticking with our investment policy today. We have a strong investment policy. We are not deviating from that. All of our asset allocations continue exactly the same they were last year and the year before. So we have not taken any more aggressive or less aggressive positions. We are still staying the course, but that course may change after the asset liability study is completed. And my personal philosophy here is always trying to look at it from a conservative perspective. As we are the stewards of the assets of our employees, we need to make sure that we are at all times are protecting their principal, are protecting that reliability of having those funds ready. One question that will very likely come later this year that we will have to discuss is which rate of return or discount rate we will continue to assume going forward. That currently 7%. It's down from 7.75%. That was a few years ago. Now it's only 7%. The question is going to be, is the information in the market enough to warrant us to lower that discount rate even further? And by lowering it, it basically says we are going to assume the market will yield a lower returns. If the actual returns are higher, great. But from a planning perspective, we're going to assume lower returns, and that may force us to put in more money into the plan to account for those gains that we may or may not see in the future. But that discussion, we will have robust discussions about the discount rate here in the next few months. But that's an excellent question, and we're keeping an eye on that.
Great, thanks very much.
Thank you, Director Williams. I don't see any other hands, other comments from the board members. Okay, CFO Fernandez, I guess we're ready for, oh wait, did you have a response from your phone or friend?
No, not yet.
Okay.
I've been busy answering questions here.
All right.
I will have one if you allow me a little bit of time. I will have one, and
Yep.
I'll go back.
Did you want, yeah, I guess we're ready for the SD3 access to credit markets monitoring report.
Thank you. As Director Yoder mentioned, we didn't have a chance to go over all of the slides. So on the Finance Committee, we just talked about a few concepts high level. So this is going to be the first time that all board members will see the report. It is a report that looks almost exactly the same as last year's report, except for one slide at the end where we talk about the polar vortex and how that affected us or influenced our access to credit markets and our financial strength. In front of you is the strategic directive summarized. In order to achieve a low cost and flexible cost structure, we will maintain financial ratios and targets to ensure efficient and cost-effective access to the credit markets. Very, very important here that the objective here is to achieve a low cost and flexible cost structure. Going back to Director Moody's question earlier, it's rating agencies, it's investors, it's our reliance and our connectivity with the capital markets that's really, really important here. I will talk about affordability later on this slide. Please know that this is from a perspective of competitiveness, from investors' perspective. How competitive is OPPD and how strong is OPPD from a competitive perspective? It is not meant to address affordability from the perspective of our customer owners. That will come next month under the SD2 on rates. So with that, Ms. Hendricks, can you please move forward? The first measure here we have is our total debt service coverage ratio. I referred to these a few minutes ago. We budget for a 2 times debt service coverage ratio. For context, our covenant with bondholders on our senior debt is 1.4 times. We have internally raised the bar and budgeted for 2 times debt service. So we have a buffer from our minimum debt service coverage ratio to the one that we use. And that is one of the reasons why we can achieve the higher credit ratings we have. Let me just, for the benefit of the public and a few of our newer board members, what is the debt service coverage ratio? In essence, it's taking all of our operating revenues minus operating expenditures. Whatever is left has to be 2 times the amount we have to pay that service. So with the amount that's left, half of it is used to pay that service, and the other half, in any other year, what we do with the other half is pay cash for our capital investments. I have said this many, many times in the past 4 years or longer than that. We have been able to pay for virtually all of our cash, all of our capital investments with cash. We have issued debt and we have refinanced and done different things with our debt portfolio, but by and large, we haven't necessarily increased the amount of our debt portfolio. We have been able to do that because of these 2 times debt service coverage ratio. So very strong there. We are still planning on meeting the 2 times debt service coverage by the end of the year, not without some good work from me and all my colleagues, but right now our projection is to meet that 2 times by the end of the year. Next slide, please. These resource decisions are made through the corporate operating plan. These type of resource decisions, let me just clarify, it's not necessarily tied to the resource plan, the integrated resource plan. That's a little bit separate, although they're all linked. These resources that I'm referring to here are resources that we use in the organization, right? All the programs that we have from all of my colleagues in senior management, all the business units, how we resource our operations every year, how we resource our capital every year, and making sure that we remain competitive. In the past 5 years, including in 2021, we've had a relatively easy guideline, which is keep rates flat. It's not easy to achieve, but we've had that clarity that keep rates flat. So how do we meet operating expenditures and capital funding in a way that keeps our service level the same or improving? We have a really robust process by which our financial business analysts work with all of our VPs, all of the directors in the organization. We start building our budgets. In fact, we are busy right now doing that for 2022. We will have sessions, resource optimization sessions with my colleagues at senior management starting in July and August. This is where we all start getting all of our proposed budgets together. And we get to discuss the amount of resources we need and how those resources will help us meet the different strategic directive metrics. For example, operational requirements on SD4, right? I'll give an example of how these type of budgeting process allowed us to start increasing operating funds to improve our vegetation management program. That helps with SAIDI, right? And so there's always this correlation, and these type of discussions and resource optimizations happen in the summer. We're well on our way. We will start having those conversations in the summer, along with capital prioritization. All of this eventually makes it into the corporate operating plan that we will start sharing with the finance committee sometime in September, and then with the board in October, November, and ultimately for a vote in December. Any questions on that slide? Okay, next slide, please. Debt ratio. This is a measure. Another measure of financial health. That is our share of debt to total capitalization. How much debt we have compared to our capitalization in the organization. A higher ratio is not necessarily good. That means that you have a very leveraged organization. We have a lot of debt in the organization compared to what you own in the organization. A range in the 50% to 60% is considered healthy. It's one where it allows us to issue debt so that we can spread costs amongst the different generations of ratepayers who will enjoy the benefits of the infrastructure we're installing. But at the same time, we're not issuing too much debt that then it limits our ability to access capital markets. Our debt to capitalization ratio has been in the 50 to 55% range. It had been for many, many years. It went up to 66% in 2016, and that was because of our decision to decommission Fort Calhoun Nuclear Station. That had an impact of increasing the debt ratio without us issuing more debt. The assets that we had on our books declined, and we have every single year as we pay off debt and we add more assets, that ratio has continued to decline. We have a few large projects in front of us, Power with Purpose projects. And so one of the questions I receive, and in fact, this is something that I shared with the Power Review Board a few months ago, is as we've debt financed these new projects, what's going to happen with this ratio? We believe that this ratio may go up maybe 1% or 2%. We may be in the 57, 58% between now and 2023. We're adding more debt, but we're also going to be adding more assets. So keeping that debt issuance in line with the value of the assets you're adding is going to be incredibly important for us. So very happy, very pleased to report that our debt to capitalization ratio has continued to drop. We expect that to drop down to 56% by the end of the year. Next slide, please. Days liquidity. This is incredibly important, especially it became very, very important, very evident in the March timeframe after the polar vortex. The orange bar depicts days cash on hand. This is cash that we have available in different accounts for the district. The way this is measured, it's not in dollars, but in how many days would that cash allow you to operate based on your daily operating expenditures, right? And in this case, if you see 2021 line, we're expecting to have 175 days cash on hand by the end of the year. That is supplemented with liquidity. Liquidity are lines of credit that we have access to, but we don't necessarily draw from, but we have that access available. This is an economic, very economic way for us to access liquidity without having to carry that much cash from our customer owners. I am very, very pleased to report that during the 2020 timeframe, in one of the toughest financial conditions in the market, we were able to increase the line of credit. The board approved an authorization to increase the line of credit last year, and we are fully expecting to execute on that authorization by the end of the year. So it is helping us keep our total days liquidity at 263 days. That's almost 9 months of operating liquidity that we would have. If all the revenues dried up, all of a sudden we would have these additional number of days, which is, again, a very important metric that supports our credit rating.
Javier, if I can ask a quick question. So the available line of credit, that's strictly the increase is based strictly on the board action. This does not reflect any way on the financial situation of the organization or the economy or whatever, right? That's strictly based upon the board's recent action.
That is correct, Director Kavanaugh, and actually that's a great question. If you look at the 2016 timeframe, we're planning on ending the year with about the same days cash that we had in 2016. So it's still a healthy, very healthy number. What our market conditions allow us today and our strong credit ratings allow us today is to access lines of credit at really favorable terms. And so we are in the middle of negotiating and awarding lines of credit. We're looking at adding that $200 million line of credit that will help boost our days liquidity. But to answer your question, Director Kavanaugh, this is not in response to any financial problem, right? This is we are in a really strong position. We would be in a strong position regardless. This is allowing us to then further strengthen that position, right? And do it in a way that is economic for our customer owners. Access funds that are not necessarily in the bank today, but we can access at a more competitive, more economic way.
Thank you.
You're welcome.
The board's, I'm sorry, did someone else have something?
Go ahead, Rick. I'm sorry.
Yeah, the board's already, as you pointed out, we have that liquidity due to a board action. And I just wanted to emphasize, not that there's a cost, there is a cost to having access to that liquidity, but it's a really good way to manage the risk that we would face, all kinds of risks, whether it's another polar vortex or a flood or a plague of locusts or whatever. So I'm just happy reflecting that we've got this strong position. So I'm sorry. Director Williams, did you have a question?
Yeah, great. Javier, perhaps I missed this, but with the additional line of credit, do we intend to decrease the cash on hand at all and use the line of credit instead, or that would just add to the total amount here? So the 263 is, I'm sorry, can you show the breakdown of the orange and the blue that we're seeing here after the currently in process negotiated line of credit? Can you kind of project forward what that would look like?
Thank you. What you're seeing today is a projection. So it's adding to the 175 days of cash.
Question, Director Williams. The long term, the intent, Javier, is to build up the cash on hand and not to use liquidity from the line of credit. Is that right?
That's correct. So we're not planning on drawing from that line of credit, but it's important for us to know we have it, for us to show investors and rating agencies we have it. In tough times, we would use it. We haven't had to use it, but it's always a good tool to have.
Thank you. Other questions?
I'll ask one. So the delta in cash on hand from 2020 to 2021 is about 63 days, I guess. So how does that correspond or relate to the financial information that you provided us that demonstrates that we're about $60 million short right now based on what we had budgeted? Do they play together?
Part of it does. The other part is this is how we budget. So we look at cash projections for the end of the year. This is back in 2020. We looked at how much cash on hand we had. We looked at what are the healthy levels of cash we need to have on the books, and how to best deploy our cash on hand. One of the uses is to use some of that cash to pay for capital investments the following year. Right? If we have quote unquote excess cash above and beyond the amount that we think we need to support our rating, we use that to supplement the budget. And instead of issuing debt, we also use our cash balances. So it is a combination of both. But your point on polar vortex, yes, it is part of what allowed us to decrease these. Now, if you remember the quarterly dashboard that I presented earlier, we ended the quarter with the same amount of cash that we had budgeted for. So the effect of cash is the polar vortex did have an effect on cash, but not significant enough to cause me any concern.
All right, thank you for connecting the dots there. I'll just make a comment now that, businesses can't get lines of credit when they're not doing well. They're only really available to businesses in healthy times. So you ask for the line of credit when you don't need it. And that's what you guys have been doing, and you're managing this really well for the district. Thank you.
Yeah, thank you. One last point that I haven't mentioned here is we also asked the board a couple of months ago to authorize us expanding our commercial paper program. That will allow us to access debt instruments that are really, really low interest rates compared to long-term higher interest rate debt. This additional line of credit is helping us augment the amount of commercial paper we will have outstanding. So that's yet another use for that commercial line. For that line of credit to support the commercial paper program. If there are no questions, we can move to the next slide. Please, Ms. Sanders. As I mentioned earlier, this is just the tip of the iceberg. There is a way more robust conversation on affordability happening next month under SD2. This is a very high level view of our competitive position versus the regional average, OPPD's competitive position, and it shows that as of 2020, again, the EIA information is still being updated, but preliminary information shows that we are at 9.8% below that regional average. Very important for us, but also from an investor perspective, knowing that we are keeping an eye ultimately on the people who are paying the bills, right? Are we remaining competitive, and is our rate structure supportive of the strong credit rating that rating agencies give to us? More to come on affordability and competitiveness, but it is also an element that we keep in line here with access to markets.
Director Williams?
Yeah, Javier, I'm not sure if this is appropriate now or next month during the affordability discussion, but I mean, we see a trend down in our position, and we also see let's call it level rate for the wider market. As we look forward and we hear rumors about the potential for inflation, and there are large investments that need to be made by us and by other utilities, do we think that the long-term future of retail rates is continuing to be able to decline, as we have seen slight declines recently, or will be level, or will need to increase relative to our expenses and others? Is that something you'd like to talk about now, or is that something we would talk about in the affordability discussion?
Great question. I would say neither. I think that's a really good conversation for us to have when we're developing the budget, right? Remember, this is a look back, very important question. I think part of it is we have completed a 5-year period with no general rate increases. And as you well pointed out, inflation has been putting a lot of pressure. Our salaries and cost of materials have continued to grow in the past 5 years. We have engineered ways for us to use our assets in a more effective way, and that's how we've been able to do the no general rate increase. At some point, our rates are going to have to increase. And the question that you're asking is, how long? Maybe if I can interpret your question is, how long until those start to increase, and how fast will they increase compared to other utilities? That is something that we will keep an eye on. One thing I can tell you today is the band with utilities and rates in all the utilities that we compare with, it has narrowed. Even though we are towards the bottom of that spectrum, some of the lowest rates, and you will see these next month in the SD2, the band has narrowed. So today, I am not aware of any major utility whose rates are 20% below the average. The band is -10 plus 10%, but that band has narrowed. And I think all of us are trying to do the best we can to remain competitive. And we will continue to do that. But at some point, our rates will go up. It'll be very important to know how our neighbors' rates are going up. And can we beat that? Can we increase rates at a lower rate, at a lower speed that our competitors have? But I'm sorry, I can't give you an answer today. I think that's a perfect conversation for us to have during the 2022 COP discussion on how 2022 is shaping to be for rate increases.
Yeah, and you did interpret correctly what I was trying to ask there. We have a metric that says target of 20% below, and we have talked previously about whether or not that is a realistic target and how we might update that in the affordability discussion. But I guess the general idea is for expectation setting looking forward, we see, at least in the period shown in the graph, a trend down in our rates. And I also don't believe that it is reasonable to set expectations that we would continue to see declining retail rates for customers into the future. And so I appreciate the clarification that you're providing now, and I look forward to that discussion as we go through the SD2 and into the budget cycle. Thanks.
Thank you.
I don't see any other hands.
Okay. We can move on to the next slide, Ms. Hinders. Again, this is thankfully a boring slide, but I don't want it to be so boring. I want to call out the work that John Thurber, John Petroulis, and everyone in the OPPD team does to keep these ratings. It looks flat. It looks with any change. We have continued our Moody's ratings and Standard & Poor's ratings of our long-term debt at a AA2 and AA, very strong ratings. There's a lot of work that happens behind the scenes. But in summary, all of the metrics that I've presented to you so far support these ratings. And we've already had conversations with rating agencies this year. We don't have any indication that these ratings are in jeopardy of changing. So we will continue to do everything we can to maintain them. And the last slide, this is a new slide. Hopefully it's the only year that I get to present this slide. Ms. Hinders, if you can move on to the next slide.
Actually, before you go, can I ask a question related to this, please?
Yes.
Can you tell us a little bit about what you're seeing from credit rating agencies with regard to environmental stewardship and how they're starting to talk about environmental stewardship?
Oh, certainly. So it's not a new conversation. It's something that's been happening for a while. And part of the conversation is it's twofold. One is from a regulatory perspective, and the other one is just from a business economic perspective. Rating agencies have made it very clear that from a regulatory perspective, there has been an increased emphasis on environmental stewardship. So they know that utilities who are late in the game, so to speak, to embracing an environmental view on their operations, are likely going to have to increase costs from a regulatory perspective. Whether a few years ago was a Clean Power Plan, and many other regulations that may push a utility to expend resources faster than they had planned. So they look at that from that perspective, and they look at OPPD. We've engaged in depth with them on conversations about power with purpose, the SD7 directive that we have on lowering carbon emissions, getting to net zero by 2050, our plans to reduce emissions by 30% by 2024 with conversion of North Omaha units 4 and 5. All of those elements are really, really important for them because they have to assess the utility's financial health vis-a-vis the regulation that they are seeing today and what they expect to see in the future. But it's not just regulation. They have also made a very clear case about the good business that is environment, social, and governance practices. This is the ESG practice that companies that embrace those three elements are really strengthening the triple bottom line. So they look at us from that lens, figuring out how well we're managing those aspects of the operations, because they believe that is something that will strengthen the utility, strengthen the business model of the utility. We are not a business; we are owned by the people, but we act like one, and so we listen to rating agencies, and I can tell you the conversations are more robust and lengthier today on environmental aspects than they had ever been. So we're actively engaging with them, and they're closely watching what we do, and still again supporting that rating that we have today.
So if I understand that correctly, if we weren't pushing on some of the environmental metrics that we are, our rating would be in jeopardy, perhaps into the future.
It would be a relatively negative effect. I don't know if that alone would put it in jeopardy, but certainly what we're doing today makes my job a lot easier when I talk to rating agencies. That's what they're expecting us to do. That's what they're expecting to see. They're seeing different speeds, different policies approved across the country, but certainly we're not lagging, and that is really, really important from a rating perspective. From investors, there are investors who just flat out won't invest on companies who have certain environmental characteristics. So this move is also expanding the universe of investors. Excuse me. So it is helping.
All right, I'm complete. Thank you.
I don't
so
see any
the
other
next
questions. Go ahead.
Thank you, Director. The next slide is the one that I was joking a little bit that I hope is the only time I get to present these to you. But it's important for us. This is the way to wrap up the presentation. Our strong financial position coming into the year served our customer owners well. My goal as a CFO is to keep that financial position as strong for the end of the year so that we can continue to be able to withstand all of these changes that may happen to us. Our cash on hand is sufficient to operate for, as I said, for almost 6 months, actually more than that. 175 days, so I guess that's about 6 months. Requested increase in the bank of line of credit. It's offering us additional flexibility in really, really good terms. We were very fortunate, and I want to call out all the banks, financial institutions who responded to our RFP. Very strong, very competitive. And this AA2 rating allows us to access lower costs, and we will see these later in the year when we get to issue debt. We're gonna issue debt to finance new construction, new capital projects, but we're also looking at issuing debt to continue to refinance our existing debt. So very, very important for us to maintain that rating in order for us to get those lower debt financing costs. And as I said, we're not expecting any changes to our ratings based on preliminary conversations with rating agencies. And that concludes my presentation on SD3.
Good. Thank you very much, Javier. I see in hands any follow-up questions. Action item, board to approve the report on Thursday. With that, I think we're complete.
All right, thank you. We're running nicely ahead of
Oh,
schedule.
Director
Go
Yoder,
ahead.
excuse me, I
No,
almost
sure.
forgot. I'm too excited about the SD3 monitoring report. I do have an answer to Director Bogner's question,
Oh,
Ah.
almost.
if I may. And
Perfect.
since we're running a little bit ahead, can we go back, Ms.
It's
Henders?
slide 22
There
is
you go.
the questionable slide. Yeah. There you go.
That one. And I'm gonna call Laura Langford if you can unmute her, please.
Can you hear me?
Yes.
We can.
Okay, perfect. So yes, good question on that chart there. And what I understand the question is, it looks kind of weird. It is a limitation of Excel. Really, it's a stacked bar chart. So a portion of the item in there, investment income, is actually negative. So when you have a chart here where we have a piece of it being negative, it is trying to show that negative portion below zero, because we had an actually investment loss for the first quarter. And then it's also trying to show the other pieces added on top. And so when we look at the upper right-hand corner there, the year-to-date actuals of the 4.8 million, that is the total. But we recognized it as we were putting this together. We said, yeah, that chart looks kind of weird. We looked at some other Excel options, and they also equally looked odd in here. So we were like, well, let's go with that. It is showing the pieces correctly, and the total's correct, but just recognizing it was a limitation of Excel.
Thank you, Laura. Just a quick question then. So for that other income, I guess, is it that light orange part of the bar that's that 4.8, or is it still a comprehensive total of that whole thing?
So it's totaling them up. And just to give a little more insight into that, investment income was like negative 9.5 million. So that's showing that below the bar. Other electric was 8.8 million, and then that other was the rest of it to get up to the top of 5.5 million to total the 4.8.
Gotcha. Okay. That makes far more sense now. Thank you, Laura. I
You're
appreciate
welcome.
the help. Okay. I think we are good to move on. We are running ahead of schedule. And so in some back of house conversations here with Director Williams, we are going to take the first 4 systems items and then break for lunch. So I will turn it over to Director Williams now to give the systems management and nuclear oversight chair report.
Great. Thanks very much. The Systems Committee met on May 5th. I think you can see on the screen the agenda from the items that we discussed. First there, the property and easement acquisition. I believe we'll have a discussion item here coming up on that in a little while. So I'll defer to that topic when it comes up. Secondly, the Bright battery update. I would encourage people to look at the Community Connect page for the Bright project. Again, that is a pilot project focused on a battery installed at an OPPD facility to help us understand how that technology can be a benefit to our system, and then learn what other features might be available for us in the future from potential expanded use or potential different implementation of those types of projects. So again, there is a page on the Community Connect platform that has some information about the Bright project. And we'll be hearing more about that in the future from staff as we have appropriate public updates. I'm going to jump to number 4 there. We talked about the board work plan, and I believe we have an item later in the all committee meeting today to talk more about the board work plan broadly. But the next item from the board work plan for the Systems and Nuclear Oversight Committee is the SD9 related to resource planning. We've talked previously about that topic potentially being referred to as resource adequacy in the future. And that's particularly timely because we have ongoing work for both the IRP, the Integrated Resource Plan effort, which is being conducted this year, and the strategic initiative around decarbonization, also a resource planning activity. So while we don't currently have a timeline for an update to SD9, we are keeping in mind what that current strategic directive says, how that works with the ongoing activities, and how we can continue to update policy in the future so that our resource planning or resource adequacy discussions are aligned with the policy and the needs of the district long term based on the comprehensive study that's currently going on. So those are the items that we talked about in the Systems Committee meeting. I'd like to move now to what's listed as number 3 here, the SD7 Environmental Stewardship Policy Revision discussion. we have had a public comment period open for the last approximate 30 days. And I believe all the directors received a summary of the input that we received on the policy language. We had a little bit of discussion last month during the committee meeting about the policy language. And then from the comments, we did have some discussion based on the input that had been received at the time of the meeting on May 5th. And that led to bringing this item here today and the expectation that this item will move forward to a vote on Thursday. So if any directors did not have time to review the comments there, I would encourage you to do that before Thursday. I do plan to ask this be an action item so that we can receive public input on Thursday at the time of the vote. But I would like to have some discussion today, now that we have had the opportunity for some input from the public. And if directors have any additional thoughts, I'd like to give you the chance to express those. I would like to categorize kind of briefly the types of input that we received related to the policy discussion that we have here, because there were a few things of note from the public input. First of all, we received some public comments that seem to have somewhat of a misunderstanding or a misalignment with the policy language that we have. And if we can put the policy language on screen now, I believe we have a red line version of that. Thank you. The part that I'd like to highlight here is that only the section in red is being considered as the policy update. The other sections in black are the current policy, last updated November 14th of 2019. And there are other activities carried out by OPPD that are not specifically related to the policy language that we're discussing here today. So the policy language is limited to the recognition of the scientific consensus around climate change. And it does not directly dictate any future resource planning decisions nor other activities of the district. This is designed to be a policy update to help affirm the best available information for board members as we make policy decisions and as we work with senior management and staff on implementation moving forward. And so there were a number of comments that we received through a variety of different platforms that addressed other topics that were not specifically related to the policy language that we're considering today. And so I would ask that we keep our discussion today focused on the language that we have here and the substance of the policy, rather than kind of external factors that are related to future activities or our environmental stewardship more broadly, but might not be directly related to the red line that we have today. If we can take a step back now, one slide, this will highlight some of the here we are, the strategic directive refinement process. We have talked repeatedly about the public engagement chart from the IAP2 organization, and through discussions, we have generally referred to this as an involve process. There are 5 stages in the IAP2 chart. Involve means that we seek to share information and receive input back from the public about the policymaking process. And so that's why we use the 30-day public comment period and why we have the discussion today. I feel that this has gone extremely well. So kudos to Lisa Olson and her team for introducing that IAP2 chart for use by the board and the staff as we carry out these types of policy updates. And I feel this was an excellent implementation of a new platform, the Community Connect, for providing input and understanding of how that input would inform our policy decision here. So again, I think we can see the SD refinement process graphic. I don't know if anyone has any comments or questions there. But if not, I would like to then ask if directors have any thoughts based on the input that we have received, or any other thoughts related to the policy language and steps that we might take. Again, essentially the expectation is that this would move to an action item on Thursday. So do any directors have comments that they'd like to share about any of the input or the language that we have so far?
I will have some input, but I prefer to wait until Thursday to share those. The only thing I want to point out this time is this will be the 3rd revision to this SD in the last 2.5 years. But again, I will hold back on everything else I have until Thursday if I can.
Great. Thank you, Director Kavanaugh.
This is Director Howard. I just want to say I really appreciated the process of revision for the strategic directive. It was the first time that I'd really been given the opportunity to consider a revision And I appreciate Director Williams clarifying, because when I read through all of the comments, it is really important to note that the only thing that's being changed is what's in red. It's not the entirety of the strategic directive itself. And I think if our constituents call us to look at it with a different eye, I'm happy to do that as well. But I appreciated this process very much.
Great, thank you, Director Howard. Director Wagner, I saw a hand briefly. Did you have anything? Now I see shaking of a head, so I'll take that as a no. Any of the other members not on the Systems Committee have any input that you'd like to share today? Okay. As we talked about, I'm expecting this to be a discussion and action item on Thursday. My own feelings on the comments that we have received prior to the vote that's coming on Thursday. There were some comments that disagreed with the scientific information and attempted to make a technical argument. I consider that inappropriate and bordering on irresponsible. I do not believe that I personally have ever met anyone who is sufficiently qualified to carry out the scientific and technical analysis necessary to determine whether or not a consensus on the subject of climate change is appropriate. If you just look online, if you type in scientific consensus, Google will pre-populate the suggestion on climate change, because the topic has been so robustly discussed and covered from the 1980s to the Kyoto discussion through today, that I feel that the attempt to submit comments questioning the scientific veracity of the information that we would use in our judgment moving forward is, I understand those comments, but for my own personal best information available to make judgments within OPPD, I'm going to trust the experts who have dedicated literally tens, hundreds, thousands of hours to the study of the subject that we're discussing here. And a brief summary of the what's referred to as the scientific consensus. The points are that Earth's climate has warmed significantly since the late 1800s. Human activities are the primary cause. Continuing emissions will increase the likelihood and severity of global effects. And people and nations can act individually and collectively to slow the pace of global warming. And so there were comments that asked about whether or not there was a scientific consensus. I think it is more than abundantly clear that yes, there is a scientific consensus. The points of the scientific consensus are extremely clear, extremely well documented, extremely available, and backed by more comprehensive research and information than essentially any topic ever studied by humanity. And so I think that comments asking us to critique the science are inappropriate, and I don't think that that is our responsibility as policymakers. I believe that we should be using the best available information in our judgments as leaders at OPPD, and this policy update, I believe, clarifies that climate change information will help inform those other decisions that I talked about earlier related to resource planning and other operations within the utility. There were comments that referred to this as a purely political topic. I disagree with those comments. If the subject of scientific understanding is purely political, I question the political decisions that would say that disagreeing with science is a value that you hold. I think that is inappropriate. I'm uncertain why anyone would think that that is their political position. I am disappointed that that political position is common in our society. And I hope that we can move beyond the idea that it is political to understand scientific information, and that instead we can use the scientific process and the best available information as we set policy that impacts the lives of people in our community. So I believe that this is an important policy that we adopt and update to verify that, again, this is not designed to be a political process, but using the best available information. And lastly, I would say that the vast majority of comments that were on the subject have been supportive of the policy update language. And so from the involved process that we have used, the comments that we have received from people in the public broadly support the language and OPPD moving forward with the best available information in our policymaking. So I'm not sure if anybody else has any final thoughts here. If not, I would suggest that we move this forward to the agenda on Thursday as an action item for any final public input at that time, and then a vote to approve the policy language. And if we can put that on the screen one more time, the policy language that we have available. I don't see any hands raised in WebEx. I don't hear anyone or see anyone. So I appreciate the process that we were able to use for this. And I look forward to having this adopted and then moving forward to continue to make appropriate decisions based on the best available information.
Director Yoder, do you have a comment to make?
Nothing substantial. I just am happy to see that this, so you have my concurrence that this should move forward and for board action on Thursday.
No, thank you, Director Williams. I appreciate you shepherding the refinement of this SD through. And I sometimes it takes us a while to get SDs right. And so I am not surprised that, we've gone back and forth with language over the years. And I think that we're on the right track here. I think that what we just heard in the access to credit markets report actually reaffirms why the district from a fiduciary standpoint has to be cognizant of the impact that we're having, and using scientific consensus to drive policy is, in my opinion, the right way to do policy development. So thank you very much for shepherding this, and we will make sure that this is on the action item list for Thursday. Are there any other comments? Oh, go ahead, Director Spurgeon. Oh, we cannot hear you.
Thank you.
There you go.
Many of the comments that that were not supportive of this change were concerned that actions we would take in moving forward with this as another foundation for environmental sensitivity, that we would abandon reliability. And I think it's important that we assure the public that that is one of the legs of our mission. I am a person who lives in an all-electric domicile, so having reliable electricity is pretty important to me, as it is to everyone. So this is not an abandonment of reliability at all. What it means is that we will be confronting the challenge of how to continue to become more environmentally sustainable and maintain that reliability. But it's not being abandoned. Thank you.
Great, thank you, Director Spurgeon. I think that covers everyone. So with that, I'd like to move to the
I think Director Moody would like to make a comment.
Oh, nope. Okay.
Yeah, I don't have much. I mean, really, the question is, do we carry this forward and put it on the agenda for Thursday? And I think to me, the answer is resoundingly yes. And then we can all have, like Director Kavanaugh, some other comments to offer on Thursday as to why I think this is important to pass.
Great, thank you. And now with that, I believe we have concluded the discussion on whether or not this will move forward to Thursday. Thank you. So next we have an action item on the sale of real property. And so I would ask Kate Brown to present that item for us.
Good morning. Thank you, Director Williams. Can everyone hear me okay? Okay, fabulous. So yeah, we have two items. One's a sale and one's an exchange of some property. I'll do the sale first. This is a sale of a portion of property in the city of Papillion, located at 602 East 1st Street, Sarpy County, Nebraska. And the purpose of this is to extend Osage Street south to 1st Street along the west property line with the sale of 8,875 square feet, or 0.0204 acres, as shown on the screen here. This does not adversely affect our operations at OPPD now or into the future. And the dollar amount of the acquisition is $50,000 that was made by an independent appraiser, valued by an independent appraiser. And OPPD finds this to be fair compensation for this land. That's the first one.
Is this property adjacent to other property we're using, or just freestanding as far as our purposes?
You know, what I'm going to do is I'm going to call on Jake to answer, Jake Farrell. He's available. If we can turn his mic on, he can speak to the more specifics of this. So I'm going to call on Jake.
Okay.
Yes, so this is the west side of a substation that is currently not being used. It is expansion property. We've ran this through our substation group and feel that this is not a hindrance of our ability to operate now and in the future. Is that helpful?
Yes, thank you very much. Appreciate it.
Yeah.
Thank you for that question, Director Kavanaugh. Any other questions, or I'll move to the exchange of property. Okay. So we have an exchange of property with Sarpy County located at 9090 South 180th Street in Omaha, Sarpy County, Nebraska. This is near Gretna, Nebraska. And this is to allow roadway improvements along 180th Street and Meridian Street with the transfer of 0.687 acres to Sarpy County, as shown on the exhibit on the screen, in exchange for 1.211 acres to the district, as shown. The exchange of property does not adversely affect operations for OPPD now or into the future, and OPPD will reserve easement rights over all property conveyed to Sarpy County, Nebraska. So we are very comfortable with this exchange. I will pause and see if there are any questions on this topic or item.
Sorry, couldn't get off mute real quick. So there's no cash transfer here. It is just simply land for land. Is that a fair assessment?
That is correct.
And you mentioned the potential for future maintaining easement rights in this location that would allow any transmission distribution infrastructure that we would need in the area, correct?
Jake, that's correct, I believe. And if I'm misspeaking, let me know, but I believe that's correct.
Helps if I unmute too. I apologize. Yes, that is correct. OPPD will reserve easement rights over all of the property that it deeds off to the county.
Great, thank you.
Yep.
I
Jake,
do
thank
see a
you.
hand.
Sorry.
I do see a hand from Mary Spurgeon, but Mary, I'm curious if that is still from earlier. You had a comment now. Hand down, so I'll assume that means we can move forward.
Great, thank you.
The next item, let's see, Amanda, how do we want to handle
we're at 11:30, and I think the next couple items are planned to take about 30 minutes each. Tim Burke, would you be able to maybe give us the Nuclear Oversight Committee report before lunch, and then we can break?
Yes, I can do that. Thank you very much. As you all know, Mary is not able to be with us this morning, so I'm going to go ahead and give that quickly. I think you can hear me okay. Just a couple things, and it's in the data sheet here, but all of the buildings within the deconstruction area at the station have been turned over to our contractor for eventual demolition. The warehouse has been reduced to ground level, and we are beginning the preparations to begin deconstruction of other structures underway, including the removal of these activity. The waste processing structure and the rail spur has been complete, and we've had the first batch of the rail cars arrived on site, and they'll be used to begin our bulk waste shipment campaigns. And these shipments at this point have been performed via over-the-road transportation, primarily large semis, and they'll be moving now to rail cars. The Nuclear Regulatory Commission conducted the required second quarter inspection, which included a facility tour. The evaluation consisted of criteria contained in really two of the inspection procedures that are required in their quarterly reviews. No findings or violations were noted. The NRC will return in July for the third quarter inspection, and to discuss the license termination plan. So all things are going well. The teams are performing very well, safely, and our contractors are performing in the manner in which we need them to perform. So with that, that would conclude the Nuclear Oversight Committee report. Thank you very much.
All right, are there any questions about that?
I have a question. So,
Oh, Director Mulhoff.
yeah. So and Tim, I don't know if you can address this or if we should wait for Mary or if there's someone else you can call a friend, but talking about the waste that's being moved by rail and over the road transportation. And is this nuclear waste? What precautions are being taken, and how are we working to ensure that the public at large is not put at risk during the removal of this waste?
Yeah, there are very clear regulatory standards on how we take that waste and protect that waste in canisters that allow it to be transferred, whether it would be on semis or whether it be on rail, and in that process are able to be safely shipped. And they've gone through, over the course of time, a variety of testing on the canisters and the material that are utilized in these kind of transportation related activities. And we'll do those and conform very clearly to the Nuclear Regulatory Commission requirements. And again, we are again matching up with those requirements and performing appropriately. So we don't see any concerns or issues with that, or any concerns or issues with the safety of the public, actually. And rail, typical rail transportation is relatively safe.
Okay, I was just responding to some comments that I saw from folks talking about nuclear waste transportation and coming to a nuclear facility near you, that this was going to be brought out into the general public. So thank you.
Thank you.
If I can, so there's universal waste, there's bulk waste, and there's nuclear waste. So the nuclear waste, doesn't that stay on site? I mean, that's what we're building our containers for. The bulk waste would be construction waste, and that would be going over the road, and other less regulated. And then the universal waste is a subsection of hazardous waste, but it's more universal. But it is a subsection, and that's happens around us all the time. So, I mean, I'm not hearing where the concern is necessarily. The nuclear waste isn't leaving the site, is it?
No, the fuel is not leaving the site, but I think the concern is there's still radioactive material, whether it will be in cement or in steel containment, materials that may be on site as we begin to take buildings down around that containment area. And I think that is historically the concern. But again, those resources are protected. We are meeting all of the regulatory standards for any shipments of those, but the fuel itself is going to be on site in our spent fuel pool, our dry cast storage, which we have built. I think most of the board members have had the opportunity to tour that, and that will remain in a safe condition. So
right. Thank you.
Director Kavanaugh?
Samantha, Tim, was any thought given to the possible value of the buildings later on, possibly being sold or repurposed for our needs at all, or is that something that just really wasn't on the horizon?
Well, we're still using the training center and the administration building for the contractors and for our resources that are still on the site, and we'll continue to do that for a period of time. These are primarily within the primary area of Fort Calhoun. These are adjacent buildings, the auxiliary buildings, the warehouse buildings, and at some point in time, we'll be taking down the containment building around the around the reactor itself and begin to take that apart in an appropriate and safe manner. And so we have looked at that. Our intent, those buildings may or may not be able to be based on where they are today and relative to current and historical flooding kind of activity, probably not necessarily in the right place for future use. And so once this project is done, those parts of the asset will probably come down. Again, that determination will be at a later date, and really turn that area into green space and probably have appropriate fill that will move it outside of any of the flood impacts that we've historically seen there. So, so hopefully that answers your question.
It does. Thank you.
All right, are there any other questions? All right, so I think that at this time we're gonna go and break for lunch because our next two systems items will probably take longer than the time we have remaining before our lunch break. So we had originally slated 30 minutes for lunch. So how about we plan to come back at 12:15, and that gives us a little longer than half an hour for lunch. And then we will continue our systems committee discussion at that time. All right, thank you.
Hey, Amanda, are you there?
Chair Bogner. I think Mike Kavanaugh was just inquiring if you were on.
Thank you. Mike, I see your note.
Yeah, I just sent you a text, Amanda, and for you also, Mo. I need to sign off about 3 o'clock today.
Okay.
Okay. Thank you, Mike.
Shane and Danny, if I can just have you guys unmute just so I can hear you real quick. Make sure you sound okay.
Yeah, Brent, can you hear me?
Yep, thank you, Shane. I hear you just fine.
Thanks. This is Danny, Brent.
Hey, Danny, how are you? You sound a little
I'm
distant.
doing good, thank you.
That's better. Okay,
How about now?
perfect. Perfect. Thank you, gentlemen.
All right. Thank you. Bet.
Brent, are you able to remotely lower hands for Janice and Mike?
Unfortunately, that is not something I can do at this time in WebEx events.
Okay, as we come into the next item, I'm just, I don't expect they have questions yet, but.
All right. It looks like Director Kavanaugh did lower his hand. Janice, if you can hear
That's
us.
Mike.
If you want to go ahead and hit that button, that'd be fantastic. Thank you.
Good afternoon.
Hi, Julie.
Brent, this is Mark Pohl. Can you hear me okay?
Hi, Mark. Yes, I can. Thank you so much. I appreciate it.
Okay, we'll go ahead and get started if I have all my directors back. See if I can see all. Oh, we're missing a few, it looks like.
I think Director Yoder and Director Molhoff. There's
There we
Director
go.
Moody.
All right. Okay, we'll go ahead and get started. All right, Director Williams, we're back at you with this next item, the Sarpy Southwest Transmission Project.
Great, thanks very much. And I would like to ask, it's listed as Troy Vai. So Troy, are you there to introduce this item for us, or is someone else going to be starting here?
Yes, so I'm here to introduce it, and we're going to have Shane Hansen, who's our manager of transmission engineering, actually present. And you know, obviously we're here today to share the final route of the Southwest Sarpy transmission project after going through our stakeholder process. And I just want to start off by saying we recognize that building transmission does impact landowners. And so it's something that we don't take lightly. It gets a lot of attention here at OPPD, and we strive to lessen the impacts when infrastructure is deemed necessary. In this particular case, we also recognize the need to maintain. good level of reliable service to our customers and a growing community, and this project helps us do that. I'm super proud of the way the team has collaborated both internally and externally with stakeholders of all kinds. And I will say this is a complex, sensitive, and super important effort, and I think they've really done a nice job of navigating through those complexities. We've had individuals from several of our business units involved with this along the way. And with that, Shane, if you're ready, I'll turn it over to you.
All right, thanks, Troy. Just checking, make sure you can hear me okay again, right? Okay, perfect, thank you. As Troy mentioned, so my name is Shane Hansen. I'm the manager of transmission engineering here at OPPD. And I have the privilege of being the project manager over this routing, siting, and public involvement process. So ultimately here today is to show you the results of this process and ultimately announce the final routes. So Mo, if you could move forward, please. All right. And I apologize, it appeared, there we go. Back us up one slide here, sorry, Mo. All right, so our project overview that we're looking at today, so ultimately, it's required in this area to construct 3 new transmission lines. This is the purpose and need has been kind of a consistent message that Danny Belt and Troy Vi have been discussing at our Power with Purpose board update meetings. So ultimately, it is the 3 new transmission lines for the new Turtle Creek backup generation facility to support the load growth in the area, and then ultimately to maintain the system reliability and resiliency. So if we move into the next slide. So for the process that we've gone through, so this has been a process that began back in December of 2020. So we have kind of this 4-phase process rolled out. I apologize, I think my bandwidth is a little bit slow and I may not be seeing the next slide here for the routing process, Mo.
Yeah, I don't see it either, Shane. So it's not just your system.
Okay.
Mo, are you able to move it to the next slide?
I've clicked on it multiple times.
Okay.
How about now?
Gotta love the technical difficulties.
There we go.
Okay. So for, as I mentioned, so we have this 4-phased approach to the Sarpy Southwest transmission project. You know, ultimately started back in December of 2020, where we began this, you know, starting to inquire and develop the survey area. Had 2 online public meetings, you know, where we did mail out letters to the entire area. So we were roughly around
Brent,
600
do you think it would help
to
to cut everybody's video?
I'm not seeing any bandwidth issues at this time, Mo.
Okay. I am. So I don't know what to, sorry about that.
Apologies.
No, and thank you for that, because I'm seeing my VPN connect and reconnect multiple times as well. So I will bear with me, but obviously stop and ask questions if this isn't showing up correctly. So again, we sent out about 600 letters each round to these online public meetings. You know, and obviously these are online due to COVID. So our typical approach is to host these meetings in person. We like to get out in front, you know, face to face with the stakeholders in the area to really hear their concerns directly and see, you know, and get that feedback to relay these concerns. So luckily, the study area made it so a smaller virtual session was much more palatable. So Mo, I'll have you move on to the next slide, please. Okay, I'm still not seeing us move forward. Tim, have you seen any move forward yet?
Oh, not yet. There we go.
Okay, there we go. Okay. Okay, so these are the routing and citing criteria that have been presented to the public. They've been on OPPD Community Connect, and So ultimately, we are looking to route these transmission lines with the attention to, balance in some respects the social, environmental, and engineering concerns. So there's a very cross-collaborative team here in OPPD that actually reviews this criteria and provides input to the process, with the intention of really finding what is most important to the stakeholders in the area from the landowner perspective, but then also conferring with the local leaders and agencies that are in the area to identify the criteria that may not be publicly available. The NRD and the NDOT are just a couple examples of agencies that we try to work with to really understand what criteria matters most in this study area. And then ultimately, it was those public meetings and that stakeholder feedback through our online comment mapping tool that allowed us to really weight these criteria for what mattered most within this study area. So if you would go to the next slide, please. Okay, so this was what was shown to the public during our first online public meeting back on January 26th. And really this is, the study area is in the light gray and this, where we call these segments in the middle. So these 3 transmission lines are made up of the different color segments. And what we wanted to propose in this is really anything that we felt could be a viable option. So we didn't want to really eliminate anything that we felt, we wanted that stakeholder weight, that stakeholder feedback. We wanted those local leaders and agency feedback to really help drive these decisions and reduce segments in a more thoughtful, collaborative approach instead of just OPPD. So now we can move to the next. It may move forward, but it's saying I'm having an issue. So are we seeing the phase 1 results slide?
We are seeing.
Okay.
Yeah.
Okay, perfect. That just took a second on mine. All right. So ultimately, during that meeting, we had 26 public attendees for the live online meeting. During that, we obviously facilitated a live Q&A sessions where anybody who was in attendance was able to provide comment, and really answer the questions and concerns for the stakeholders. So all these pings that you're seeing are maps that we received through our online comment mapping tool. And again, these comments are really just inputs that we should be considering. Some of them are always going to be the please don't come here, but a lot of it is really the feedback that helps us make better decisions or, show that one side of a road may be better than others. So really great feedback that we did. And then obviously this isn't representative of all the comments since we did receive a lot of that information through the OPPD Community Connect as well as calls into the OPPD call center. So Mo, I'll have you move to the next slide. So really the next slide that we're looking at is the results of phase 1. So we moved into the phase 2 reduced route segment options. So we took the feedback that we received from that phase 1 from all the stakeholders and local agencies and started to cross out segments that really were not the best options due to that routing criteria that we had established. So one real, easy one to point out here is the Platteview corridor was removed from phase 1 as we moved into phase 2. And really there was a lot of impacts to some homeowners, that are right off of Platteview Road. But then there's also NDOT, NRD, and other considerations. And ultimately, it was even from an engineering and cost standpoint, if there's no reason to make the lines longer than they need to be to go down to the south when ultimately our ending substations are to the north, all those criteria weighted together made it an easy decision to remove any segments that went down to Platteview. So this is then what we took to our phase 2 online public meeting. And Mo, I'll have you move to that next slide, please. So phase 2 results were similar. We actually had 39 public attendees for our online meeting. In addition, still had a live Q&A session that was, lively with a lot of great feedback from all attendees in place. We're also showing now the online mapping tool comments. So we received 11 of those mapping comments during phase 2. And same thing. A lot of it was the similar attendees with similar questions, similar comments, but still great feedback, even if it was repetitive, that we still were making sure that everybody was engaged and were able to take this consideration as we moved from phase 2 into our final route determinations. So Mo, I'll have you move to the next slide, please. Thank you. So ultimately, this is what we're here to announce today. So these are what we're representing as the final transmission routes for the Sarpy Southwest Transmission Project. So this was, again, a cross-functional team of OPPD that weighted all those comments, questions, and criteria that we received. So we had our engineering, land management, environmental, economic development, stakeholder engagement, and public affairs teams that were all part of this team to really make sure that we are finding the best overall routes that did measure our criteria that we had presented to the public, and then also find something that we viewed as a procurable from an easement acquisition standpoint, permittable from an environmental and agency standpoint, and then ultimately constructible and designable from that engineering aspect. So these are those final routes that cross-functional team was able to coalesce around. So ultimately, this ends with approximately 63 parcels of property that will be receiving a directly impacted landowner letter, and those are intended to hit those homes actually today or tomorrow that show the map and then give them the next steps for how they can be in contact with OPPD. And those 63 parcels actually turn out to roughly 43 landowners in this area that we'll be talking to. So one good point of clarification, so for transmission routes, these are, you'll just notice they're center of road, center of property. So we have not determined which side of road or which side of property will be the next step of where we're at. So we'll be starting into the detailed engineering design and detailed right-of-way work. We'll be going out and working with those individual landowners and the local utilities even in the area to really understand what is on that property and what physical barriers exist today or may exist in the near future that we need to engineer a route around. And that's ultimately when those decisions for side of road or side of property lines will be made. So Mo, I'll have you move to the next slide, please. And again, I apologize, my bandwidth is lagging a little bit.
We are seeing structure examples.
Okay, perfect. Thank you for that. So we wanted to show just the example structures that you could be seeing on this with these transmission lines. So 2 of the lines that we're looking at today, we are looking to build as the double circuit 345 over 161 kV transmission lines, similar to the pictures you see on the left. And this is actually a line that was just built in the Sarpy County area along Highway 50 and energized just back in 2019, so very recent. And then the other line will be just a single circuit 161 kV transmission line. And again, showing this photo in a more of that property boundary lines construction that we built in our Blair to Fremont line a few years ago. So Mo, if you would move to the last slide, please. All right, and ultimately this is kind of that next steps layout of what we're looking at. So as I mentioned, after today, we really move into that engineering design, right-of-way activities, and environmental assessments. So we need to start gathering a lot of the data and doing that detailed designs to start that next step that would be moving into procuring our long lead material, such as steel poles, and and other things of that nature. And then, from there, we move to our public hearing, which is a requirement prior to beginning of easement acquisitions. And then, lastly, it's that construction in the July 2022 to May 2023 timeframe with property restoration and project closeout to follow. So I did go through that rather fast, but obviously, Mo, if you want to go to the next slide, it is time, any questions that we can field.
I do see a hand from Director Moody. You'd like to go ahead? I'm not
Yep.
sure if you're, yeah, okay, great, thanks.
Yep. Oh, sorry, I turned my video off. You mentioned 42 property owners. I'm just kind of curious the extent to which we know whether or not some, most, all, few of them were involved in the stakeholder engagement process. Did we get comments from them? I mean, just kind of curious about what that delta is between who we've talked to and who we may not have heard from. Do we know?
Yes, I appreciate that. So we don't have that exact metrics of, obviously we have the landowner list now. So we did see a lot of those comments on these final route. So I don't have that exact metric for you. The one thing to note is obviously of the 43 we're contacting, not all of them will be part of that easement acquisition process. So a lot of, once the side of road is determined, that'll actually eliminate some of those landowners that will no longer be. And this is just one of those unfortunate things from a stakeholder engagement is, we did a lot of outreach from letters to newspapers to social media posting, emails. We attempted to get everybody involved, but unfortunately we can't force everyone to be involved in the process. So that's where that next step of making sure we get out with our right-of-way coordinators and actually make contact with all 43 individuals is really our next important step.
I see a hand from Janice, but I don't believe she's with us. Do any other directors have questions now? I don't see anything. Troy, perhaps this is a question for you, or if someone else wants to answer. Any comments about how this item relates to the next item on the agenda, the discussion about the land rights acquisition?
Yeah, we purposely put these next to each other because they do dovetail a little bit. So as we go through this process, and we'll go into more detail with the presentation that's coming up. But as we go through this process of negotiation, we do what we can to try to make sure that we can come to an agreement ahead of time with our landowners. That makes for a much easier, smoother process. But in the case that we can't come to an agreement, we do have the capability of using condemnation when necessary. And the next presentation is really going to spend some time publicly talking about what that looks like, what it means, what it doesn't mean, things of that nature, so that there's some clarity around it. And so, with that being said, I think Julie is the owner of the presentation.
Troy, 1 second before we pass it over, I believe Director Yoder also has a question, so he wants to jump in.
No, more of a comment. I just wanted to thank the team for the extensive outreach they've done in developing the options here, ultimate solution. I think for transmission, and distribution, impacting landowners, I think it's really been a good process. I guess my question at this point then, when people know what the routes are, I know you're going to go out and talk to landowners individually. If there's some discontent among those landowners, that'll be handled pretty much one-on-one, right, with the negotiations with your crew and the landowner, rather than in a public forum.
That's correct.
Right? Yeah. All right. That's good.
And that's very similar to what you saw with the Sarpy County project that we've had, the La Vista, some of the more recent ones. So we've exercised this muscle a little bit over the past few years, yeah. And we've actually been pretty successful in the negotiation process of coming to an agreement without having to go down the steps or the process that we're about to talk about.
Yeah, that's been my observation too. And since it's in my district, I haven't heard otherwise. So good, keep on with the good work. Thank you.
Great, thanks. And Troy, I guess, yeah, since these two tie together, if we want to hand over to Julie for the next portion of the presentation. And then if we do have any questions about the process for this particular location, I think the slides here will highlight some of the steps that will happen in the land rights acquisition. So maybe at the end, if anybody wants to come back over to the specifics of this location, I think there'll be some more information that should be helpful. So Troy, I don't know if you have anything final or if Julie is ready to go.
I have nothing else. I'm complete.
All right. Thank you, Director Williams, and thank you, Troy. And Lisa's not on the call today, but I want to thank Troy and Lisa and the team that has executed the Sarpy Southwest stakeholder engagement process. Really, it's through the professionalism and the thoughtfulness of the employees and this excellent stakeholder process that they've put in place that really minimizes our need to go down the path of eminent domain, which we consider, a last resort type of option. Even so, there are instances where we may have to execute eminent domain. And so the state statutes require that the board has to authorize us to go down the process. And that's what brings us to this action item that's before you, to authorize eminent domain to acquire the easements or the ownership of land for our electric transmission facilities and substations from now through December 31st of 2022. And I want to talk a moment about the time base and the non-specific nature of this easement request. So in the recent past, when we have sought eminent, the authority to execute eminent domain, we've approached it for specific transmission projects. And with Power with Purpose and with other potential system load and system reliability requirements that we see in the next 3 to 5 years, we believe we're going to have a lot of activity that will be occurring in this arena. And so we want to switch to it being more of a time-based approval process. So with that, we understand that we still want to keep the board informed as we go through that process, and we want to ensure that we would continue to do stakeholder engagement processes as they're appropriate based on the nature of the specific project. So the types of acquisitions that could be occurring under this action item could be as large as the one that was just talked about, or it could be regarding a current property where we maybe already have an existing easement, but we need to move one pole. And so rather than keep coming back to the board for those types of items, we wanted to just have one non-specific project one through a specific time period. And then the idea would be at the end of December or in the December 2022 board meeting, if we knew we had projects that were on the horizon in 23, which we believe we will, then we would come to the board and ask for another year of authorization on this eminent domain. So we do commit to providing updates to the board. Obviously, we can do it through our pre-committee, all committee meetings and other director updates, email type communications as appropriate. We'll make every effort, as Troy mentioned, our goal is to work with the our landowners and negotiate these rights voluntarily and avoid the process of eminent domain. We don't take that action lightly, neither the board or management. And so we did think it was important to have Mark Pohl, who's our supervisor of land management siting, step through a brief presentation on what our process is for the acquisition of the land rights, just to ensure that the board and the public also is aware of the scope of the action item, as well as the approach that Mark and his team will be taking as they reach out to the landowners to acquire these rights. Again, this process is to acquire those land rights to ensure that we can build out the infrastructure that's needed to serve our customers in a reliable fashion. So with that, I'm going to turn it over to Mark Pohl.
Thank you, Julie. Can everybody hear me okay? As Julie said, I'm Mark Pohl. It is my pleasure to share some information with you today regarding the processes that are involved with acquiring land rights for energy delivery projects. My aim here, as Julie mentioned, was to really provide a high-level overview of the steps that are involved and to answer any questions that you have. Next slide, Mo. So projects that involve transmission and substation work are certainly nothing new to OPPD. Our team has great experience with projects that range from single pole structure replacements to large scale transmission projects that span upwards of 50 miles. Having the authorization to utilize eminent domain if it's necessary after good faith negotiations is essential to keeping these projects on schedule and really allows flexibility to adapt to changing needs. We included this slide here as really a visual way to really clarify to both the board and the public what is in scope for this requested board authorization. Just to be clear, it is for property that OPPD acquires for our substations, along with the temporary and permanent easements that are obtained for constructing, operating, and maintaining transmission infrastructure. This action does not pertain to energy production infrastructure. So to be clear, property that may be utilized by a third party or even OPPD owned generation assets is not in scope of this action item. It is only the transmission and substation infrastructure. Next slide, Mo. OPPD takes great care to engage with the impacted landowners during these energy delivery projects. The stakeholder outreach on the left side of this slide really is scaled to suit the needs of the project. Some large transmission projects, such as the Sarpy Southwest transmission project you just heard Shane talk about earlier, involve a routing, siting, and public involvement effort that spans the course of several months. Other projects may be much smaller in scope, such as the individual structure change that Julie referred to. Those types of projects may only involve a single landowner from an outreach perspective. But if I go back to Sarpy Southwest transmission project as an example, OPPD is at the announce final route phase. Our immediate next steps, as Shane alluded to, will be to meet with directly impacted landowners along the final route. We utilize these on-site discussions to really understand the unique characteristics of each property. We collect feedback and information that help us with the engineering design, and we also answer any questions the landowner may have. We're actively working here to mitigate their concerns. This is our chance really as a company to establish the beginning of what will be a long-term relationship with the property owner, and it helps us to minimize impacts to their property. We continue to stay engaged with these landowners throughout the following phases of the project. As we acquire easements from them, we construct on their property, and then eventually we work with them to restore the property once construction is complete. Mo, next slide, please. So I wanted to provide a quick overview here on easements for those that may not be familiar. So an easement in this instance is a set of rights on private property that are provided to OPPD, but I want to be clear that OPPD does not own the property. Now you might be asking yourself, why does OPPD place transmission equipment on private property easements and not just out in the public right-of-way? Really, the short answer is to minimize the potential for significant expenses for future relocation. It also helps us to avoid utility congestion that may exist in that public right-of-way area where we would have to compete with space with other utilities. So our easements really define our ability to construct, operate, and maintain a transmission line on private property, and it also allows for access to that easement area. Our easements are publicly recorded with the Register of Deeds for the county that the property is located. And they outline things that the landowner is allowed to continue doing within the easement. So a common example of this, something that would be allowed within our easement, is agriculture, growing crops. The landowner may also enjoy the use of the land in ways that don't interfere with OPPD's granted rights. And on the flip side of that coin, restrictions are also in place to protect both the critical infrastructure as well as the general safety of the public. Some examples of restrictions may include structures, buildings, retaining walls, certain types of vegetation, and we also ask for prior approval before any grading activities would take place within that easement area. Landowners are compensated for these easements, and my next slide really outlines the steps we take to arrive at that appropriate compensation amount. Mo, if you would move to the next slide, please. When it comes to acquiring land rights, our team utilizes a proven approach with well-established practices. So in the time leading up to negotiations for our transmission easements, OPPD would typically obtain a survey of the property along with title, and we develop a track map that outlines OPPD's needs for that property. This helps the landowner understand exactly what area of their property is being discussed. Now, while it's not required, OPPD's best practice when obtaining transmission easements is to hire an independent third-party appraiser to help determine the appropriate compensation amount. We set very high standards for these appraisers. We typically use a certified general appraiser, which simply means an appraiser who can appraise all types of property and one who can confidently and transparently defend their opinion of value. I think it's probably also important to note that we select appraisers that are familiar with the area that the easement is being obtained. When it comes to good faith negotiations, these negotiations are held in a fair and transparent manner. We actually provide a brochure that explains what the acquisition process looks like and the rights that the landowner has during these discussions. We've found that having this tool and sharing it with landowners is incredibly helpful, especially to those who have not been part of this process before. And we work with the landowner to locate structure placements to minimize impacts to their property. Next slide, please, Mo. So for my final slide here, really my goal for this slide is to educate and bring clarity to the eminent domain process. So OPPD follows Nebraska statutory requirements for notifying landowners and negotiating with them. As I shared before, the stakeholder outreach is scaled to suit the needs of the project, and also typically OPPD would utilize the independent appraiser to establish that determination of value for the easement. We then begin the good faith negotiations with the landowner. Throughout these negotiations, a landowner can seek legal representation, they can obtain their own appraisal, they can negotiate with OPPD and accept or reject any offer that we provide to them. And in most instances where we're acquiring property rights, this is the full extent of the acquisition effort. OPPD and the landowner arrive at mutually agreeable terms, and we obtain the easement or property rights voluntarily. Occasionally, we are not able to come to an agreement. And in these instances, we provide the landowner with a final offer letter. And in order to move the project forward and protect the landowner's rights, if we can't arrive at mutually agreeable terms, then OPPD petitions the county court to begin eminent domain proceedings. And that is what you would be approving with this month's action item. In these instances, landowners are protected by eminent domain laws, which really outline their rights and ensure that they're treated fairly throughout the process. The judge would typically hire or appoint, a 3-person board of appraisers. A hearing and a site visit are scheduled. And I think what's really critical to note here is that throughout this whole time, OPPD continues to negotiate in good faith with the landowner. Our goal here is still to work with the property owner to settle things voluntarily. However, if we're unable to do so, then after the hearing and site visit, the appraisers would provide their report of value, and once OPPD deposits that amount with the courts, we secure our rights to proceed with the project. Now, I really want to emphasize that this is a transparent process and not an adversarial one. We outline these rights to the landowner in the easement acquisition guide that I mentioned earlier, and our goal throughout is really to engage with the landowners, address their questions and concerns about the project, treat them with respect, and work with them to minimize impacts to their property. Now, I'm confident in the skills and abilities of the land management and real estate teams at OPPD. I've witnessed it firsthand. They act with great care and compassion for the landowners that we work with on a daily basis. This is about a true partnership between OPPD and these landowners. Mo, if you could go to the next slide. At this time, I'll pause and answer any questions.
I have a hand from Director Bogner.
Yeah, I have a couple. So help me, remind me, please, because I think that you've told me in the past and I just don't remember. Do the easements run with the land, or do they have to be renegotiated every time the land is sold to a new owner? How does that work?
Great question, Director Bogner. The easements do run with the land. They are perpetual easements. So there is no renegotiation of the easement over time. What I will say is the easements also outline the process for compensation to property owners in the event that there's damage to crops or other damage to personal property. In the event that OPPD has to maintain its line, whether that's an inspection or doing maintenance activities, we continue to reimburse the property owner for any damages that would occur.
All right, thank you for that. And then I have a question about the actual resolution. So I think the intention is for the resolution to really apply to the work that's being done related to power with purpose. But I'm not seeing anything in here that limits the use of this to only power with purpose projects. I guess help me understand what projects might fall outside of power with purpose that this would still apply to.
Julie, do you want to?
Sure, I can take a stab at it, and if Danny Belt needs to add to it, I would invite him to add to it, or Troy. So it doesn't say specifically power with purpose. While we believe most of them will be related to power with purpose, there is a potential that there could be other new load that comes on that may require additional transmission and other system reliability needs that we identify that may require easement acquisition. And so that's why we went to being non-project specific.
Yeah, Julie, I can confirm that too. Yes. So this is Danny Belt, Director of Engineering. So from a transmission perspective, we don't have any other projects in the near-term queue that would apply to this. However, it does give us that possibility. So if we do have an economic development customer, for example, that's on a fast track approach that would involve, let's say, a real simplistic cut-in of an existing transmission line, this particular board approval item would allow us to be able to expedite the design and construction portions of a project such as that, to kind of meet the needs of a new incoming customer. But there's nothing specific that's identified as far as projects in the next year or year and a half time frame that we expect to be using this particular resolution for.
I personally would be more comfortable with the resolution read specific to power with purpose and the related work with that. I think that if there's a fast track singular project that stands out, then we can execute a similar request at that time. I get uncomfortable with eminent domain and kind of giving you guys a blank check on that. So I appreciate us shortening up the timeline from what we were originally talking about here, but I also would like to see this be very specific to power with purpose, as specific as we can get, knowing that there's many projects related to that. What do my other board members think of that?
Yeah, I had the same question, and sort of like the gut feel for me was a little bit leery about that as well. Not because we don't trust you, but because eminent domain is really important and it's the board's responsibility. Maybe help me understand this. When it comes time to execute eminent domain, when we get to that, the final offer letter, and it's time to go to the county. I'm missing the language. Maybe you can go back a slide. I guess I'm just kind of curious to understand. Thank you. Where, and what the friction is in the process by bringing stuff to the board, and how, like, help me understand what the delta will be between what our current process is for board approving these things versus you take us out of the picture and you can just move forward. Are we talking like what's the time and energy involved? How much additional time are we adding to the process? I want to understand what the benefit here, other than the obvious. Conceptually, I'm maybe looking for more concrete awareness around what the benefits are.
So I think the benefit in bringing the action items to you now and in this manner is it allows the team to go out and do the negotiations with the landowner with the, I guess, the idea that if we have to, we can go down the eminent domain path. And as far as it being the broader, non-specific project, we certainly can add the power with purpose language in there. I think the team, as I understood it, talked to a couple other utilities and how they approached it. And some of them that did it more on a time-based approach, it was less about the project. Others do it specifically to a project. So we kind of saw it both ways. So as we talked about the concerns about the time-based approach, we went to that. I took it as an opportunity to maybe go less project specific, and then that would open it up. Again, our intention would be we're going to keep you informed of any projects that are on the horizon. You would be informed through other activities that are going on relative to that, and then you would be informed at the point, in this process. You would be informed as a board before we actually did petition to the county court for any that we did pursue eminent domain on.
Yes, so thank you for that explanation. But I'm going to seek additional clarity on the first part of the question that I asked. Julie, what you described to me made my impression based on your response, and let me just repeat back what I heard so that I am correct, was that this action will give your team the ability to go out and know that they have this is a possibility when negotiating with landowners, right? Which
correct.
My interpretation of that is it's negotiation leverage rather than short-circuiting the process that we would need to go through for the board to approve. Is that fair?
That's correct.
Okay.
Yes. It's about their ability to negotiate.
Okay.
Yeah, I would just, there's two things. One is, and this, I think there's two things. One is not a blank check, and I'll just, I'll challenge that a little bit. Just because of the manner in which we come back and we share where we are on the project, if there is a concern of the board as we begin to move forward, there are opportunities to have this conversation, and we've seen that show up over a period of time as we are going through this process. And for us, it's, it does get to the point where we are trying to negotiate, one, to be able to construct what we need to construct for these projects, and two, also interested in making sure we're being fair and reasonable to the landowners. So in that regard, I think it's really important. I would tell you historically, we have been given broad authority on condemnation that I don't believe we have misused at all, and we have kept the board engaged and informed of the process. Understand this board's maybe concerned to narrow it with power with purpose, and I think you've heard the team say, you know, we're open to that. There are things that come quick to the process, and it just gives management the opportunity to execute and have that authority to execute. If the board believes they want to narrow it power with purpose, I think our management team would be open to that. Again, historically, I will tell you, we have typically been given that kind of authorization. I think earlier in the year, we had that authorization regarding railroads and those kinds of things as we begin to work through easement-related activities with railroads. Again, I think it's important for our management team and our engineering and our property procurement team, easement team, just to have that authority. And then our job is to make sure that we do it in a judicious manner and report it back to the board appropriate. Over.
Can I keep, no, I've got a couple more. Can I keep going?
Yeah, please.
So the thing that feels a little bit, it's different, right? And by order of magnitude, but for me, part of this feels a little bit like when we delegated responsibility for power with purpose. Big decision, thinking through it, and this is anyway. I'm touching base on that a little bit, and with that, I knew that everything was going to go through and decisions were going to be made by the CEO. So I guess my question on some of these is what's the decision-making authority and responsibility internally? And I fully acknowledge that you're going to bring this stuff to us. We'll know what's going on. I'm curious about kind of what those checkpoints are, but I'm interested in the decision-making authority on these.
I would just say by governance, and in this example that has been presented, the board would be given the authority to the CEO to be the ultimate kind of checkpoint.
Okay.
But I will tell you there are multiple checkpoints between the business units. It's the reason why we have the kind of the easement acquisition team and the operation team separated, right? So we make sure we have that kind of separation of duties. And then between, in this example, Julie and Troy, they're another checkpoint. And then typically they would utilize the senior team and ultimately the CEO to say, let's move forward on whatever action that may look like.
Okay, that's helpful. Thank you. And then with respect to the checkpoints, I mean, Julie, have you given, and maybe I'm sure you have, but the thoughts on what comes back and what we're going to see, and if there are any particular triggers that, you know, send things to the board for not approval, but for notification to us of certain projects, I don't know what those would be, but I'm just kind of curious about, you know, what this cadence will be, what information we'll see.
So with regard to new projects, the team would evaluate based on the size or the magnitude of it and determine if there was a stakeholder, or I should say the depth of the stakeholder engagement. So we would keep you informed of those new projects based on, you know, the stakeholder engagement that we would be going out with on those types of projects. With regard to like our Southwest Sarpy County one, we would provide you with some updates on like the number of parcels of land that we were seeking to acquire and how we're doing in acquiring those. And then we would make sure that, you know, if we were getting to the point of final offer letters that were going out, and if items were going to go through the petition to the county court process, you would be notified before that.
Okay. I think I'm complete. Thank you.
We have a hand from Director Yoder.
Thanks. Yeah, following up on what's already been said, I too would be more comfortable with clarity about which project this is associated with. So power with purpose. And I also wonder, that's potentially a large footprint project, are you just kind of thinking about Sarpy right now? Are you thinking Saunders, possibly other counties?
It would be wherever we need to connect to future generation with regard to power with purpose. The other would be like the example that Danny provided. If there was a new customer that required us to cut into existing transmission, so that could be anywhere within the service territory.
Yeah. So I understand, given the lack of certainty about where the power with purpose is all going to land, why you would want to keep from mentioning particular counties. I would just say that of the discontent I have heard about these kinds of negotiations, they've all been rural customers, and kind of large landowners, and with my history on the board beginning in 2017. So I just have my limited history to go on there. So I'll just observe that, and I don't have a solution for it. With the idea of what you're going to report to the board, I think I'm also interested. Context a little bit. So yes, the process has been tweaked since I first came on board. I think it's been improved. I haven't heard complaints like I did early on. And so good job. What I would be curious about is some metric about success rates, or metric about where the county court has opposed or not decided in the favor of OPPD. I know that has happened in the past. I would certainly want to be kept up to date on those kinds of things. So not just the numbers, we're going out to 43 landowners, and it's all going well except for this one, and so that's going to court. But we certainly want to know, and after the decision has been made, whether we were successful or not. And then I would like a little more of a dive into, was it just a cantankerous landowner, or what the decision was about, if it should go that way, and I sure hope it doesn't.
Yeah, so I'm smiling about the cantankerous landowner one. I don't know that we'd ever label it that way. But
those were my
we
words.
have, through the negotiations process on some of the historical ones, we're reaching typically close to 90%. It's in the high 80s typically that are voluntarily negotiated with OPPD. In the last two large projects that we had, I believe that they were all voluntarily negotiated. So it's just been a few that have went down the eminent domain path, and we certainly can provide those statistics along the way, if that is helpful.
Yeah, I think it is. I'd like to know your batting average, right?
Director Yoder, if I might, maybe just expand on Julie's comments just a bit. Yeah, Julie has mentioned a fairly high success rate on our transmission projects, and I'd just like to reinforce that. Our two most recent transmission projects, the La Vista transmission project, which was a 2-mile rerouted an existing transmission line within the metro area, as well as the Sarpy transmission project, which was a little closer to 6 miles across, fringe metro area. Both of those most recent projects were successfully negotiated with 100% voluntary easements. So I just wanted to kind of highlight that, to say that, each project is a little bit kind of independent as to the concerns in the area and the challenges of the line. Those two particular lines were very successful in our easement negotiation process. What I would expand further on too is that, sometimes the condemnation process is a way to allow us to quiet title. If there's some obligation that the landowner has with a tenant, for example, such as a cellular communication tower, that sort of thing. Sometimes condemnation is a good tool for the landowner in order to protect themselves against any requirements they may have with other easements on their property. And this is a good way for us to kind of go through the legal processes to make sure that, you know, the ownership of certain risks within those easement languages between multiple tenants on a particular property are successfully quieted. So not everything is about, you know, tanker's landowner that's opposed to the route. Sometimes it's purely using the condemnation process to determine a value better than an appraiser can, for example, knowing that the makeup of the Board of Appraisers within the county setting is, you know, their peers, and they might have a more favorable opinion to value and the other concerns of impacts to the property that might be important information for that the landowner to hear stated outside of, you know, just a private negotiation. So there's a lot of different metrics, and I think we've been pretty diligent about sharing kind of the successes along the way, how many go to final offer letter, how many, you know, kind of go beyond that next step. And we also usually indicate, you know, what the major problems are that we're trying to resolve through that condemnation process, you know, as we provide the board updates. So we would again agree to, you know, providing that kind of information as we proceed through these projects.
Danny, thank you very much for providing a little more understanding of the many facets that are involved here. I guess I see my role here as being watchful for any kind of common thread where there was disagreement. And so whatever you could offer that would help me understand that's what I would be interested in.
So Director Yoder, I might jump in here. I appreciate, I want to go back to your previous comment as well. I really appreciate the look at condemnation rate, and that's a very archaic way of looking at success of negotiations. And you're seeing it across the country. I ping a lot of other utilities in the International Right-of-Way Association, and we're really kind of looking at a matrix that balances condemnation rate, which is really easy to look at, as well as, like you said, successes in the condemnation process, the appeal process, how close was the final award to landowners to the appraised value, and then take lessons learned from that and tweak the process moving forward. Those are things that we are actively looking at as we improve this process in every project. So I appreciate that challenge, and I want you to know that is a process that we're currently evaluating and looking at.
Thank you, Jake. I appreciate it.
Thank you.
The final comment that I would add here is that occasionally we will have a property owner who declines to negotiate with OPPD, and they prefer to exercise their right to utilize the eminent domain proceeding to determine that value. So that would be another data point that we would potentially provide to you as well, that's a landowner preference at times to go through that process.
And Mark, isn't that true with, and Jake as well, with estates or trusts that hold property? They may be inclined to go to condemnation, so they're not at conflict with the estate owners or trust owners. I know we've seen that. So.
Agreed. There's many reasons to use condemnation, some good, some bad, right? It could be, you know, just somebody's upset and doesn't want to negotiate. You know, there are rare occasions to clean title. There's very rare occasions where it's a trust or an estate or a company that's very large and just it's hard to navigate through, and the process for it is to just condemn, and they accept the condemnation results. But those are more rare, but they do happen.
Great. I did see a hand from Mary Spurgeon. I'm not sure if she's, Dr. Spurgeon, if you still have a question.
My question was answered. Thank you.
Great, thank you. I don't see any other hands raised. So unless there are any other comments here, sounds like we've had all the questions addressed. I apologize. We did discuss the change in the language related to the authorization here. Can we clarify where we landed on what the language would say? I guess perhaps Julie, can you summarize from the input that you received from directors today what the new language would say and the authorization would cover?
Thank you for clarifying this, because that's what I wanted to understand, if the intention was that we do edit the language, and if we're going to make it specific to power with purpose, we would just add that back into the action item. And I'm trying to pull up my diligent here real quick to get to the action item language.
And Julie, in the systems committee, we had talked about the either time-based language or the power with purpose specific indication. So this would still include the letter H, the authorization through December 31st, 2022, and would additionally include language that it would be bounded to only power with purpose. Is that correct?
Yes. Yeah,
And,
so it would, we would keep the time-based in there, and we would just add the power with purpose in the,
and
hold up.
Yep, and we those comments. Sorry, you're moving around on my screen. Director Bogner, if you could just confirm, does that meet the question that you had earlier?
It does, because I'm not sure that I heard a compelling argument really that I would agree with to let it be non-power with purpose specific at this time. So, generally I think that we would approve any other request, but I think that I would rather see this be limited to power with purpose for this time period identified here. So I didn't hear any counter argument from my fellow board members.
Yeah, I concur.
Okay, well, we'll edit, I believe it was item A is where we had it inserted originally. So we'll go back and edit that and edit the resolution accordingly.
Thank you.
That sounds good. So it sounds like this will move to a vote on Thursday, and when we discuss the agenda, we'll determine if this is action item or consent item. But other than that, I think that should cover all the questions that we had. And with that, I believe that concludes the systems committee's before and after lunch spanning presentation. So thanks very much, everyone. And I guess I'll hand it back to Director Bogner for the next committee.
Okay, thank you very much, Director Williams. Let's see, the next thing on our agenda here is public information, and we have Director Mulhoff joining us fresh from some hearings. So Director Mulhoff, I'll turn it to you.
Thank you. So the PI committee met on May 11th. We had the legislative and regulatory update that I believe Seth is going to present to the committee in a few minutes. Julie gave us a customer trends update, and that will be available online, and it's in diligent for the directors. But the gist of it is that aged debt balances continue to decrease, and we're very appreciative of our customer service reps and all the programs they've put in place to help our customers get back on track with their balances for their utility bills. We also discussed stakeholder feedback for SD7. That's already been addressed in the committee this morning. Lisa also talked to us about community engagement for the CEO selection process, which really went well, I think, for that, as much as we have completed that process. And then the last thing we talked about was the board work plan on SD11 and SD13 on economic development and stakeholder outreach and engagement. And the committee members have committed to review both those SDs, the most current monitoring reports, and other information that related to changes that we identified in previous meetings, and also some work that was done by Director Yoder. And then we will have a discussion about those SDs and what our work will be going forward, hopefully in our June committee meeting. So with that, I believe I will turn it to Seth for the legislative and regulatory update.
We need a second to promote Seth Boyles.
All right, can everybody hear me?
Good to go.
All right, so I'm the pinch hitter today. So why don't we go ahead and get started? Thanks everyone for all this, and I look forward to giving you the update. Mo, if you can go to the next one. So this is just the legislative calendar we have. There's been one change to that. The sine die day is now going to be on May 27th, potentially the 28th. They're going to try to get through this week of all the last of the final reading bills, and then have some time next week in case there's a governor veto, and come back on the 27th, potentially the 28th if they need to override any veto. So the session is going to be cut short just a little bit. One of the reasons they are doing that is because they're going to come back for a special session for redistricting, and they feel that if they need to do some things, then they might. It's going to be a little iffy on how they do that, since that special session is going to be specifically for redistricting, but that's what they said. So let's go to the next slide, please, Mo. So these are the priority status bills that have been out there. We've changed this up just a little bit because what we're showing here are just the ones that still have, that these are the bills with the priority status that can actually still move this session. And we've gone over a lot of these. I'll just go through them very quickly. LB 83 was on the Open Meetings Act that's been signed by the governor. LB 84 by Senator Bosselman is adding nuclear to the definition of renewable in the Imagine Nebraska Act in order to make sure it's eligible for incentives. And this is in case a small modular reactor and advanced reactor comes here, that they can have that as well. That is advanced onto final reading. It says select file there. When we did the report, it was on select file, but today it was moved to final reading. 139 by Senator Breezy is on COVID liability protection. This is a priority of the chamber. It's moving through the process as well. LB 279 by Senator Bostar, that's adding weatherization and renewable energy to issues of the Affordable Housing Trust Fund, so that you can use money from that trust fund for those purposes as well. That was signed by the governor too, and it's a good project. There was a little bit of concern on renewable energy side on using that money for the Affordable Housing Trust Fund on that, because some of those projects could be a little bit more expensive, but I think all that stuff was worked out. For us specifically, LB 306 today was put on final reading. It was read across today, so we are hoping this LB 306 will be on for final reading tomorrow, and that hopefully it'll pass. It should pass overwhelmingly there. We haven't had too much opposition on select file. It passed by voice vote, so that was very encouraging for all of us. Senator Brand is a very diligent, and he's been working very hard on this bill to make sure that everyone has had a say. And we're hopeful that that can pass tomorrow and then be sent on to the governor. Next slide, please. Again, I'm going to go through these ones pretty quick. I'm just going to pick out a couple here. LB 409 by Senator Brewer. This is his electric transmission line study. It's been narrowed down a bit, but that bill is still bottled up and it's not going to come out anywhere. LB 449, Senator Wishart introduced this bill on our behalf for $100,000 this year and next year for weatherization projects at NDEE. This was included in the budget, and the budget passed with this money still in there, so that's good. We got that money out of there, and it's statewide money, but our partners are going to be looking to get that in there as well. LB 460 is the leasing of dark fiber for public power districts, municipalities. It's still in committee. There was a chance we were going to try to attach this to other things. Senator Brandt and with our encouragement decided not to on some of those things because it would have been controversial and would have been hard to do. But this bill is still alive and well and going in the next session. As Tim O'Brien usually tells you guys, this is it's a two-year cycle when it comes to these things. As long as your bill doesn't die the first year, it's still alive the next year. So that's where we're going to go from that. LB 474, we were just monitoring this one. We're neutral on it. every bill that's passed in a state about medical cannabis has provisions in there to make sure that businesses that are drug-free can still be drug-free without any kind of repercussions or anything like that. And that's why we have this on as neutral, just to make sure that those provisions were still in the bill. They were, but unfortunately did not pass. So next slide, please. These are the other bills of interest that we've kind of taken a key interest in. LB 338 is more on broadband. 380 is the budget, which we talked about before. 388 is also on broadband. This bill also advanced the select file on 428, but now today it has been moved to to final reading, so that should be going hopefully in the next couple of days as well. And then 650 is on carbon sequestration. This is mainly for the renewable fuels, ethanol companies to be able to, if they're able to use this, they can sell their ethanol into the California markets where they're a little bit more lucrative. That's what this is for, but it does have implications for OPPD and other utilities that we can potentially use this as well for CCS going forward. So I think that's all of the state bills we have there. So I'm going to pause there. It was a lot of information very quickly, but I'm happy to answer any questions.
Director Williams?
Yeah, this question is not specifically related to the legislative topic, but you mentioned the redistricting that's going to be going on later. There was a story in the paper last week, and I thought this might be a good time to flag that we also will be carrying out an activity there. Can someone highlight how the district boundary evaluation will go on here at OPPD, or is that a governance committee topic that we'll be handling?
It is a governance committee topic that we will be handling and we'll discuss publicly in the future.
Yeah, if you wanted a quick rundown, I'd be happy to provide it, or we wait for a later time.
Nope, I just wanted to tag on the topic that came up here because the legislature was discussing, and reminded that we will also look into that later in the year. So
Right.
Thanks very much, appreciate it.
Very good.
Any other questions on the state? There were a couple resolutions too. I'm sorry, Chair Barton.
You're fine, go ahead.
Would be remiss if I didn't talk about a couple of the LRs going forward. Mainly the one that Senator Brewer introduced last week regarding basically the polar vortex, but it goes into a little bit more. We mentioned this at the PI committee. They are looking at doing a hearing or a study around the time they do the redistricting. We just found that out today, so that's new information there. We will work with the committee on whatever they're looking to do there. We view it as a good way to, it's a good education opportunity, realistically. We know we did everything as best we could. There's our after action report will be out around that time, I think. So will SPPs and other utilities, and we'll give an update on that going forward there as well. So anytime these things come up, I always view the LRs as an education opportunity. Senator Howardson, the PI committee, a lot of times these are good opportunities to do that. But realistically, when you get these reports, it all depends on what the report says later. Is there a recommendation going to the state to do legislation, those kind of things? And we're not sure where that's going to be yet. So other than that, we can switch over to the federal side. So Mo, can you go to the next 2 slides, actually? So here's the federal update. It's mainly just this one slide. As of May 6th, there were 4,500 plus bills introduced in the 117th Congress, and it's only growing. They're being very active here in the first few months, and I mean that's a pretty good clip starting in January to start introducing bills. Hearings are starting on energy and environmental policies to get the future groundwork done for legislation on climate and a lot of other subjects. And I'll kind of go back to that when we get down to the Clean Future Act. Infrastructure still is the dominant theme out there in DC right now. President Biden has his $2+ trillion 8-year infrastructure package out there. The Republicans have introduced their first iteration of that, which was $568 billion counter proposal. But what that's actually going to end up doing, so they're already going up to up that ante up to, I think it's up to $800 million. So they've already been meeting with President Biden to see where they can come up. A lot of this is coming down to the definition of infrastructure. DC, they will fight over a definition for years if they need to, and then usually just bogs down the system. But that's what this is coming down to on a lot of these things. The Republicans are trying to focus more on just, bridges, roads, those kind of things on infrastructure, and the Biden administration and the Democrats that have introduced their side of it, they want to be a little bit more encompassing when it comes to that. I'll give you one example. In President Biden's $2 trillion plus proposal, there's $100 billion in there for transmission, those kind of issues for utilities. The Republicans version doesn't have any money for that. So those are all things where we're going to be working with our federal delegation, our strategic partners, APPA, LPPC, and others, to make sure that whatever's in there, Public Power One has access to it. If that's through, comparable incentives, just access to grants, whatever it is, we are working to make sure that Public Power One has a seat at the table, but two has access to those kind of things to make sure that we're not losing out on certain issues. The Lift America Act, this is the tax problem, the tax bill that's going to be accompanying a lot of these. There has been a lot of discussion on President Biden's pay-fors, his tax revisions to pay for his infrastructure package, and that's going to dominate a lot of what the discussion is, because if it's not paid for, what do they do at that point? Because the margins are so narrow in the Senate and the House, how is all that going to work? One of the big provisions on that is raising the corporate tax rate from 21% up to 28%. There's been kind of a lot of controversy around that. Most people think it'll settle around 25% if they can get that done, and that's a big if still. And then that other part, where are you going to get that other money to pay for it? So they're working on those kind of things. When we say those kind of things, tax-exempt financing is usually one of the pay-fors that comes up on our bonds, and that's one thing that we've always fought against. We need to make sure that tax-exempt financing is always intact and not messed with, because that's how we keep our costs down. So that's one of the things that we always keep an eye on that way. Other major bills that are out there, the Green Act and the Clean Future Act. Clean Future Act is their clean energy standard. Been a lot of discussion that way. A lot of hearings have been going on with this on electric vehicles, environmental justice. The CES is going to be coming up here shortly, just to see what actually can be done with those kind of things. The big part of the Clean Energy Standard on the Clean Future Act is utilities will need to have net zero carbon by 2035, which is a very accelerated rate. This changed from December to when they introduced the bill a few months ago. So it used to be 2050, but now they've dropped it down to 2035, and then economy-wide by 2050. So those are big steps that all the utilities are trying to get their hands around and see where that's going to go. A lot of the utilities out there that I keep hearing from are saying, well, if that's the case, the transmission that is going to be needed to do that by that accelerated time frame is going to be very, very expensive. So we're keeping an eye on all those things, how those things come out. They're talking about reliability off ramps in case there's some reliability issues. There's even a little talk on affordability as well. Because if the affordability goes up to meet these kind of issues here, what does that do on the environmental justice side? Since low-income folks are going to be paying a bigger percentage of their income to kind of take care of these kind of things, what's really the fairness on those kind of things, making sure that pricing, reliability, environmental justice, everything is kind of taken into consideration to come to craft a program that can work for everybody. And that's a very big task to go through, and that's where they're kind of going to be at right now. And then again, the cabinet nominees are moving forward fairly well, and we'll have some more of those issues going forward there. So with that here, I know this is a quick kind of down and dirty thing here. Any questions on this side?
I do not currently see any directors' hands raised. Are there any questions? Nope. Okay.
All right, we're going to do a little bit more on infrastructure right now, so you can kind of see where it is. These slides are coming from, I think these are from National Journal, so it kind of gives you a different kind of perspective on it, almost third-party confirmation on what's going on here. We've gone through a lot of these as well and what they're kind of looking at doing, so I'll run through these pretty quick. The background on this one is you can really see it's repairing highways, roads, and bridges. That's what everyone really sees as the real definition of infrastructure. But now they're adding other things in there about completing and upgrading schools, expanding high-speed broadband, and then shifting towards clean energy. That's where some of the rub's coming when there's talk about infrastructure, when both sides are trying to get together to figure out what that is. The broadband's not, that's an easy one to throw in there, but the schools and the clean energy are the ones where they're kind of talking about right now. We'll see where that's going to go. Infrastructure is usually bipartisan when it goes, and it should be good going that way. Next slide, please. So this is where the spending comes down, where you can really kind of see through it. So that it adds up once you get going. So electric vehicle incentives, $174 billion, roads and bridges, public transportation. When you get to the middle column there, $100 billion for electric grid and clean energy. So these are the things we want to make sure that, because a lot of times when these incentives come on, they're either with tax incentives or those kind of things. They're usually geared toward investor-owned utilities. But we're going to make sure and push very hard that all utilities, cooperative, public power, are able to take advantage of a lot of those things. And we're seeing some good progress on that front going forward so far. But you'll see where there's a lot of money. It's a lot of money they're talking about. I mean, a lot of money. So hopefully they can get some of these through, because it's going to be needed. And we'll get, and this is what I'm saying, it's needed on the Biden's first 100 days. It kind of lays out exactly what they have, what he's been looking for, and everything that he's laid out has been introduced so far. This is another piece of that puzzle, though. Next slide, please. Now here's the part where there's going to be some controversy that we talked about before on the corporate rate, and the rest of these tax provisions that he has on there to pay for his infrastructure bill have come under attack. Chamber of Commerce, a lot of the businesses, a lot of those folks that have been out there, and they're very confident that they can stop a lot of these things, especially in the Senate the way it is. Because what they may need to do is go to reconciliation for infrastructure, which then kind of limits a lot of the things that they can have here. And it's mainly in the Senate where he's really coming up against that opposition. Senator Joe Manchin of West Virginia has already said he won't support raising the corporate tax rate to 28%. And there's a lot of other senators that have raised not specific questions, but questions and where their support isn't there yet because they haven't been consulted enough. So they're trying to work through all that right now. Senator Biden's having weekly meetings with different tranches of senators coming to the White House to talk through some of these things, and that will continue until this is basically done. Bipartisan meetings, there's some that are mixed, there's some that are not, and he's frequently meeting with the big four, the leaders of the House and Senate, to see what they can come up with. But there is some pressure that he's even getting on saying, well, stop all this negotiation, let's just use reconciliation, let's just push it through, let's do it that way. But Joe Biden is holding firm that he has wanted to maintain, that he wants to do bipartisanship where he can, and as a last resort, go to reconciliation if needed. And that's very prominent right now out in D.C., even if he's getting in trouble for it. Next slide, please. So here's the Republicans' infrastructure package, a lot more narrow. Like I said, it's less than $600 billion. I think they're going to move that up to around $800 million. There's no text on any of these things yet. It's just kind of their ideas that are out there. But, you know, there's some people that think that they may break the bill up in pieces and parts, but we'll see where that's going to go. But it's a drastically reduced bill to see where they can and can't go. Like I said, there's not a lot of pieces to it yet because we haven't seen the language, but as soon as we do, we'll take a look at whatever that is. Next slide, please, Mo. And here's the spending levels. As you can see, it's a lot more narrow. There's only one column instead of the three that President Biden had, and it's mainly where it usually goes to when it comes to any kind of infrastructure, that the traditional infrastructure issues. Not a lot of anything that's you outside of that box. So, next slide, please. All right, so before we get on these next set here, any questions on infrastructure? It's kind of a nebulous thing right now. We're working through whatever we can on those things, making sure that public power is included with whatever we can and seeing where we can play. But until they start actually getting some language and those things kind of fleshed out, it's more just saying, hey, public power needs this, needs to be to have equal access as everything else. So, but I'll pause for any questions.
I do not have any hands raised. Are there any questions from the board? All right, seeing none, go ahead. Oh, go ahead, Nick, Director Spurgeon.
I guess I'm
We
curious.
can, yeah.
I guess I'm curious about if you're engaging directly with Nebraska's legislators, or are you doing this? Is this happening through your efforts with the Public Power Association?
Great question. It's all of the above. It's with our delegation because they're in some of the committees of jurisdiction. We're also talking with our public power stakeholders, APPA, LPPC. I also engage with the Nuclear Energy Institute. We're still a member of NEI. So we have a lot of those groups out there too. And we're also engaging with the committees of jurisdiction. I worked in DC for a number of years. I always tell everyone the energy world is a very small town in DC. You always stay part of it. You just change jobs. So a lot of the contacts that I worked with and the people that I worked with, they're still out there, still working on the Hill, those kind of things, and I'll engage with them as well. The members on the committees of jurisdiction that are really handling this, energy and commerce, transportation, those kind of folks, I still know a lot of those member staffers on there, so I contact them a lot to make sure to see where this is going, how it's working. You know, I still have a lot of friends in the energy and infrastructure world out there that lobby, that give me intelligence. We still have frequent contacts that we trade notes on what we're hearing, those kind of things, so that we can all keep up to date on what we're doing. So I'm trying to use as many angles as I can to really talk through where things are at, get the latest intelligence I have, and then act on it accordingly. So it's really all of the above.
Thank you.
Are there any other questions right now? All right, doesn't look like it. Go ahead, Seth.
Okay, and these are the last set of slides we have here. This is the overview of President Biden's first 100 days and kind of go through his legislative priorities. And I think this is a good slide to end on. I think this is my last slide. These are the big things that he talked about going in on his first 100 days. COVID stimulus became law already. Climate change and infrastructure, it's been introduced. It's really keeping going that way, along with his infrastructure plan. Those are all kind of in that same issue there. His education issues have been introduced. Everything's been introduced, and it's working its way through the process. You know, the House is going to pass. They'll pass most of this stuff fairly easily. Even the leadership in the House is very strong at keeping coalitions together and keeping their members together to get the issues out and moving, and then get it to the Senate. And then if the Senate can pass it, it's good to go to a conference committee after that, because that's where you work out the details and everything that's going on there. I'm not saying a lot of these will be enacted into law, but the fact that they've all been introduced and they're working their way through the progress is starkly different than the last 4 years we had, when most of the issues were kind of rammed through on reconciliation, those kind of things. These have been introduced and passed, and we're working their way through the different legislative tranches that they need to, and they're having the discussions that need to be had right now. You know, when you read about DC, it seems like it's a partisan issue that no one's getting anything done. They're really working together on a lot of these things because they know they have to if they want to get things through, and it's helped. You know, it's helped get some of these things in. It's got the discussion started, and we're really working through those kind of things. So DC is working, even though it may be behind the scenes and not out in the public and the media, but they are working. So with that, any questions about anything else in DC, any issues or anything like that you guys have? I would be more than happy to answer anything, or any bills that you guys that I didn't cover that I can talk about as well.
All right, I don't see any hands, but if anyone has a question, feel free to jump in.
No, I just wanted to thank Seth for all the time he's taken on this and for keeping us informed. I do appreciate it.
Yes, thank you. All right, no other questions right now. So Seth, thank you so much. And at this time, we're going to take about a 10-minute break. And so we're going to come back at 1:55 and we'll keep going. Thank you. Okay, we will begin again. Okay, the next up here is confirmation of board agenda. We'd already talked about taking the SD7 from consent agenda onto action items, and that's reflected here. Are there any other consent agenda items outlined here that should be moved?
I'll just ask whether or not 10 should get some board discussion. It's a question, not a statement.
Good question.
It sounds like it should.
And that would also allow anyone who wanted to provide input about that authorization for eminent domain do so at that time. And I realize that between now and then is a relatively short timeline for someone to have heard about the route or other projects and submit that, but still I think we should make that available. So yeah, that seems good to me as well.
Well, this is not specific to the route, right? This is.
Yeah, apologies for the language there, but for any of the infrastructure projects that might be covered by the.
Okay.
Sure, we can move that to action if there's
I think that's
consensus from that. Okay. All right, so we will update that. Any other changes? All right, hearing none, I will just make the one change, and that will be reflected on a revised board meeting agenda. All right, next up we have the review of the board work plan. Okay, so there are a few items here that we've added some additional notes to. So SD7, of course, is part of our agenda for Thursday's meeting. We talked about that earlier today. The next item, as Director Williams had noted earlier, is work on the SD. Oh, excuse me. I'm misreading this. They're going to start working on SD9. But here on SD11, that looks like it's a PI committee document that they're targeting for June and July for discussion. So that is coming up. SD13 PI committee also is targeting June, July for some discussion on those things. I don't think, I'm not sure if Janice is with us. Director Mulhoff, do you have anything to add on those two topics?
I don't believe she's with us.
Right, I don't think so either. Okay. Okay. And then SD9 looks like we're expecting a monitoring report in August. And then that is something that the Systems Committee has targeted to work on after SD7 has been completed. Anything further on that right now, Director Williams?
No, not at this time from me. And I think, no, and I don't think anything from Troy either. So
okay.
We're good.
All right, let's move on to the next slide. And then we have a couple items here on the parking lot. Again, we added some notes here that SD1, we are looking for a revised monitoring report. We discussed that during the committee meeting and governance, and we'll continue to look at that. So I don't think, and does anyone have anything else that needs to be added to the work plan right now? Okay, all right, very good. All right, now we are on to the Power with Purpose update. Has Mary Fisher joined us yet, or is she still in?
No, but I believe Courtney Kennedy is the conversation. So.
Okay, and it also looks like Megan's on too.
Yeah, we've got myself, Scott, and Kate Thomas are ready and prepared to present this material.
Okay, go for it. I'll just turn it to you guys.
Thank you. Megan Walker here, Manager of Construction Management with an Energy Production and Nuclear Decommissioning. We're pleased to provide an update today on our Power with Purpose project. We will cover some updates on our natural gas generation project, our solar projects, and our stakeholder outreach and communication. Next slide, please. And yeah, thank you. So for the natural gas generation project, we are collaborating with the City of Papillion for our Turtle Creek Station site. And as part of that process, we're voluntarily going through their planning process. And just wanted to note that we did record our final plat for that site on April 30th with the City of Papillion. Upcoming work streams for both Standing Bear Lake and Turtle Creek Station site include our air permitting applications, as well as preliminary site grading. We are looking at our scope, the sourcing process, and schedules are in development with relation to both of those work streams. In parallel, we have been working on our fuel supply for these two sites, and having vendor meetings are in progress and continue to occur. Next slide, please. So today we have some updates on the engineer, procure, and construct sourcing progress. We wanted to remind you that it's a two-part process that we're doing. Part one, we began in late December and concluded in first quarter of 2021. But in that part one, we went through a request for qualifications with interested EPC vendors. And we received their proposals and assessed their qualifications with respect to financial, technical, and managerial aspects. And from those responses, we did select a short list of vendors. Part two is that those vendors would then receive the EPC or engineer, procure, construct request for proposal related to both sites and projects for natural gas generation. And then on the next slide, we go into part two. I'll give you, yeah. And in part two, we did, this is where we issue the actual request for proposal for the engineer, procure, construct. And we did that on April 16th. And the short list of EPC vendors that received that was Black & Veatch, Kiewit, and Zachary. Through our normal standard sourcing process, we do issue addendums and letter of clarifications as necessary to address any specification changes or vendor questions that could come up during the bidding process. Two major milestones that have occurred since issuing that RFP included EPC RFP vendor pre-bid meeting on April 26th. During that meeting, all three EPC vendors were in attendance, as well as our owner engineer and representatives from our project teams. During that meeting, we discussed expectations and schedule for the bidding process, went over major content for the RFP, and then also brought up the key and important items to OPPD specific to these projects. A week later, on May 4th, we did conduct site visits with the three vendors at both the Standing Bear Lake and Turtle Creek Station sites. And then any questions that did come up during those visits, we did respond to formally through our letter of clarification. And then on the right-hand side, you see an overall schedule for the RFP bidding process. And so several milestones we have completed and we discussed here during the slide. The next milestone that's coming up is that the proposals are due at on June 28th from the three vendors. We'll go through an evaluation process and we look to target award by the end of August or early September of this year. And then we just wanted to also call to note our commercial operation dates for each station: Standing Bear Lake on May 1st of 2023 and Turtle Creek Station on May 31st of 2023, so slightly staggered. With that, I'll stop and ask, see if you guys have any questions related to the natural gas generation project.
I have one. Can you remind me, please, if the intention is to award both generation stations to one EPC, or will they be, are they considered separate projects with potentially two different EPCs?
Yeah, a great question, Director Bogner. Yes, they will be one overall vendor will receive and be responsible for both projects in parallel.
Okay, thank you.
So we won't split that out, correct. Any other questions before I turn it over to Scott?
So I don't see any other hands. If anyone has a question, please jump in.
Okay, with that, I'll turn it over to Scott Edom to give us an update on solar projects.
Okay, good afternoon. Again, Scott Edom. I'm the Director of Engineering Services for Energy Production and Nuclear Decommissioning. And I'll be giving a quick solar project update. Over the last month, the team has continued technical and commercial negotiations with multiple suppliers on the potential solar contracts. And a specific project that we've been working on, the Platteview Solar Project, we did complete some internal project meetings, as well as supported stakeholder and community efforts for that specific project. The picture, for full transparency, that's a construction picture of the Fort Calhoun Community Solar Farm. So that is not the Platteview Solar Project, but a past project, just to give a representative picture. Any questions for me on this solar portion of Power with Purpose?
I see no questions right now.
Okay, thank you. I'll turn it over to Kate Thomas for the stakeholder update.
Right. Well, thank you, everyone. Kate Thomas, Director of Corporate Marketing Communication. I will say I'm stepping in for Tim O'Brien, and so I will give an overview, although if you have some finer points on some specific details, I may need to take those offline. So briefly, on the generation side of our Power with Purpose project, for our solar, we are actively in our Platteview project meeting. In fact, that is where much of our outreach team is right now in Saunders County, awaiting a vote here on how that project will proceed. But as we wait for that, also want to mention the fact that we have really continued our internal and external education efforts, and even last week, making sure that we're reaching out to our employees, especially those who are near the Saunders, who live near the Saunders County location, to really make sure that they know what's going on, feel educated, and are able to be ambassadors and to educate their neighbors on what the project is about and how we're going forward. On the natural gas generation, a couple of updates. So Turtle Creek Station, we have checked in with the city planning director in Papillion and continue to update them. We're actively planning our outreach strategy for both Turtle Creek and Standing Bear Lake. You can see a couple of the letters that are going out. And we have a meeting coming up in mid-June around our Standing Bear Lake area, just to make sure that we're laying out for residents what that will look like, what grading and construction expectations they should have, and so on. Next slide. And then this is really just a reminder of all of the many different ways that we continue to engage our customers and all of our stakeholders across each component of these projects. So, we're not taking it just one and done. We have moved through kind of phase 1 and phase 2 of engagement, where we're talking about this project in a broad way. Those conversations continue, but we're now approaching those points in time where we're engaging directly with those who are most interested and impacted. That being said, we want to make sure that we give lots of ways for the community to engage. I won't go through all of those on the right, but we continue to use all of the tools here that are listed to make sure that we're continuing to educate and to listen to those who are impacted and the community at large. So let me pause. Any questions?
I don't see any hands raised right now. Go ahead.
All right. Well, thank you. And that is all I have.
All right, that's it? Okay.
I believe so, yeah.
All right, with that, I'm going to find a script here for a closed session. Just a moment, please. Okay. We'll now conduct a closed session to discuss the preliminary report on the polar vortex after action review. Director Moody, do we have a motion to go into closed session?
We do. I move that the board go into closed session at this time, 2:10 p.m., to discuss the preliminary report on the polar vortex after action review. A closed session is necessary because the discussion will involve sensitive and confidential energy market information and sensitive security information about district property and utility infrastructure. The report also contains information that is subject to attorney-client privilege and attorney work product doctrine and is subject to self-evaluation privilege. This motion requires a second to move forward. Do I have a second?
Second.
All right, Ms. Henners?
Wagner,
Yes.
Kavanaugh,
I think I'm not sure he's still on.
Director Kavanaugh.
It appears he's in the attendee list.
Brent, can we promote him?
Director Kavanaugh has been re-promoted and unmuted.
Yes.
Thank you. Director Howard,
Yes.
Director Molhoff,
Yes.
thank you. Moody,
Yes.
Spurgeon,
Yes.
Williams,
Yes.
Yoder.
Yes.
Motion carried 8-0.
All right.
I believe we have.
Sorry, the motion to go into closed session has passed. This closed session will be limited to discussion regarding the preliminary report on the polar vortex after action review. No votes or other action will be taken. At this time, we will go ahead and remove the public attendees from the WebEx event, and we'll also stop the WebEx event recording. Okay, let's see, a motion and second is required to reconvene an open session. Do I have a motion?
So moved.
And a second?
Second.
Ms. Henners?
Wagner,
Yes.
I believe Director Kavanaugh has departed. Howard,
Yes.
Molhoff,
Yes.
Moody,
Yes.
Spurgeon, Williams,
Yes.
Yoder.
Yes.
Motion carried.
All right, the motion to come out of closed session at 3:50 p.m. is carried. This closed session was limited to discussion regarding the preliminary report on the polar vortex after action review. No votes or other board action were taken during the closed session. Before we conclude, can we announce the Saunders County outcome, please?
Yeah, I'm just going to turn it, Lisa, if you're still on, would love you just to tell the board officially the work of so many people at OPPD, but tell them the outcome of the Saunders County event.
Thank you so much, CEO Burke. I don't know if can you all hear me?
Yes.
We can.
Okay, great. And I know Mary Fisher is on as well, so I will defer to her. I apologize that I'm on my cell phone. We just returned from Wahoo, and it was a 6-0 vote in favor of the solar array going forward for the permit, the conditional use permit. So it's a great day for Saunders County, for our customer owners, and our teams work extremely hard on this. So Mary, anything that you would like to add?
No, I think you covered it well. I do appreciate the passion that the community had. I think that was really critical and important, both pro and con. And it was really, really heartwarming to see so many people turn out to that meeting. So it was greatly appreciated that. And just the work, not only of our teams, but the team at Saunders County. They worked extremely hard as well to help us move this forward.
And I'd just like to conclude with thank you, Director Molhoff, for being there in person as well as you were balancing the Board of Directors meeting as well. So thank you so much for that. And thanks to the entire board for your support.
So I just wanted to say thank you to Mary and Lisa. Your teams were awesome today, and it's been a rough week, as you know, and I haven't done nearly as much work as you all did, but thank you to y'all. And again, I am so appreciative of all the work that your teams did and all the people from your teams who were there to offer support. And it was just a great day for Saunders County, and I appreciate that. And thank you for being such great leaders.
Amen. Congratulations, team. This is fantastic.
Yeah, good news. Thank you all. Thanks, board, for your support, and Janice, specifically for you testifying for the Board of Supervisors today. That was very cool, very unique. That doesn't happen anywhere else, and I don't think maybe even public power, but certainly doesn't happen in the investor-owned side. So very unique and greatly appreciated. So thank you.
Fantastic. Okay, well, with that, we'll go ahead and close this down, and we'll see y'all in person on Thursday at the public meeting. Thank you.